Good morning, everyone. Hope you're all doing fantastic. Let's see. Is the sound working? Is the audio working? Tap, 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 tap. That must be a very annoying sound. So I'm gonna do it again. Tap, tap. Let's not. Please don't leave the live stream. It's just because I did that. But let me know in the comments. What's the sound like? Man, I'm tired today. Good thing I got the coffee brewing. I got some. I do not have my water. I need my water because I'm going to be talking a lot. And then when I talk a lot, I need water so that you guys get a piece of quiet at least some seconds of the live stream. Is it working? Yes, it's working. What's up, Mr. James? What's up, Akash? I love that name, Akash. Akash Farouk. Is it Akash Farouk? That's the coolest. That's the coolest name I've ever heard. Yeah. Have you seen BattleBots? This series? I think it was on Netflix. The BattleBots. That's. I would love to buy. Anyway, the announcer. I think he's called. His name is Farouk or something. Anyway. Instead of these trading battles, we should just have a battle bot. We should just take the profits that we make. You know, we take the payouts that we get from the funded accounts. We put them in a pool, and we start building the most hardcore, amazing battle bot that the world have ever seen. And I mean, I love. I watched that when I was a kid. Loved it. Amazing series. It's robots just killing each other. It's okay, not killing each other because. Okay, but damaging each other. That's really cool. I love it. Okay. London session is already moving. You're late. Okay, I'm late. Yeah, okay. Let's see what's happening right now. We got on the 1 hour of Euro USD. Man, Euro USD is just a mess. It's just this kind of looks like a very subtle, like a very not very dangerous car crash. Euro USD looks like a car crash involving like 200 vehicles that are moving extremely slowly. It's just a mess, you know, and everyone's stuck and they can't get out. Maybe that's because we got the Fed press conference coming up tomorrow, the FOMC. And then we have the balance of trade on the 8th. Then we have the, I believe we have the Bank of England doing something as well later in the week. Probably interest rate, isn't it? Data release, interest rates, avoid Euro USD. Yeah. Most likely, yeah. Okay, so what are we looking at today? Where's the money? You know, good trading. You know what they say, good trading is supposed to be effortless, and good trading is when you're standing in your office and then all of a sudden a bag of money appears in the corner of your office and you go up and you grab it and you buy a Lamborghini. That's kind of like that's what trading should be, you know? Maybe not the Lamborghini. Well, maybe it should be. That's what it should be. Trading is supposed to be effortless, right? The best traders, the market wizards. By the way, Jack Swagger is working on a new Market Wizards book. Very, very cool. So, you know, the Market Wizards, they're just grabbing money from the market at will. Literally, it's you know, because when you enter that flow state of mind and you're able to get into that flow state of mind on a consistent basis, trading becomes easy. Trading becomes effortless. The job then switch to making sure that you're able to get into that flow state of mind, you know, on a consistent basis. So what are we doing today? Well, what we're doing today is it's important that we focus on the things that make sense. And in today's live stream, the focus is going to be how to get funded. And when you are funded, how do you keep that account? Because like I do a lot of traders interviews with successful traders here at the 5ers, all using different strategies, and it kind of goes like this, right? They have a winning streak, they get funded, and they have a lot of payouts, you know, boom, 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 big, nice payouts, and then all of a sudden they lost the account. Now, how do you go from trading very well, making a lot of money? I mean, I did an interview with someone, he had like total payouts of like $60,000 in a relatively short amount of time, which is to me like mind-blowing, right? And he showed his system. Everything was very good. He was very disciplined. The system was just very simple. It was beautiful executed. And then all of a sudden he lost the account. And I'm thinking, like, what happened there? And I want to talk about that. I want to show you guys, like, how did I get funded first with the 5ers before I started working with them, and how do I manage to keep that account, and how should you try to keep your account. Mark Douglas is a legend for trading. Yeah, absolutely. Read, where is it? Right here. There we go. Mark Douglas. Beautiful book. Read that book, Trading in the Zone. Read it. The Disciplined Trader is another good book as well, by Mark Douglas. But if you're going to read one book in trading, if you're going to read just one book in trading, you got to read Trading in the Zone. Oh, is that what everyone is mocking me from saying Lamborghini? It's supposed to be Lamborghini. Is it Lamborghini? Or Lamborghini? Probably Lamborghini. 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 Am I? So I'm saying Lamborghini, and it's supposed to be Lamborghini. Well, I would like to take a moment to sincerely apologize to all the Italians watching the live stream and every other car enthusiast watching the live stream. I've been saying Lamborghini for the past almost 2 years now, and apparently I'm supposed to say Lamborghini, and I am immensely sorry to you. I feel like I betrayed big part of the yeah. Okay. So, Lamborghini. Let's take a look at USD. USD looks terrible. What else do we have here? What do you think about gold? I think gold is going to go up. We have a few things that we're going to be watching today. We're going to look at oil, S&P 500. We're going to look at NASDAQ as well. We're going to look at GBP, JPY. We're going to look at CHC, whatever that pair is. And then ACASH says Euro is a sell. I would like to say it's neither. It's pretty much all over the place. USD JPY can reverse now. Buying high stakes account today. Any discount code? No, today we don't have any discount code. What do you think about NASDAQ? Good questions today. Lots of things to cover. But first, I will get my coffee. What should I do in the meantime? Getting that coffee. I should fill this spot with something. I wish I had a 1 minute. Okay, I do have a 1 minute countdown. So I'm going to do a 1 minute countdown. And so the coffee is brewing. Now, let's see if I can get the coffee, pour it into the whatever that thing is, and then run back down into the office in less than 1 minute. Okay? And if I do not make it, I'm going to give away 25 hub credits. Okay. Let's do this. I'm gonna move the share first so I can actually get a head start running. All right. 3, 2, 1. Let's go. Whoa, I'm back. Holy shit. It's 5 seconds left. That was a close one. Close call. You know, I broke my foot in the beginning of the year, so I'm kind of like, I'm not really running. I'm more like, I don't know what you call it. Run jumping. You see me fly down those stairs. Wow. Okay, but I did forget my water though, so maybe we're gonna do a giveaway anyway. Well, let's do this because it'd been the other way around. If I make it, I'll do a giveaway. Ooh, that's way too hot. Okay. Right. Okay. Where are we starting with? Let's take a look here. Let's see. I'm gonna put all of these comments in the I have a specific starred folder here in the streaming software that we're using. I can pull them up on screen whenever we need to. Yes, thermos. Is it called thermos? I don't know. Okay, so we're gonna do a quick look at oil. But while we do this analysis, by the way, I want to make sure that you guys take some time and think about this question before you answer. So, if you are funded, okay, so this is a question for all of you who are funded right now or have been funded. What do you think got you to that point? What did you do? What did you think you did correctly that got you funded? Okay, so in the comments, right? And for all of you who are not funded, but you're trying to get funded, but you're failing. You can't get funded, but you're trying, and you feel like you're almost there. What do you think is stopping you from getting funded? And what you think you need to change to become funded? What's your biggest problem, your biggest hurdle to getting funded? Let's get a couple of answers on that, and we'll take some time. We'll go through all the comments, and we'll have a discussion here together about what's the best approach for this. What's up, man? Welcome to the live stream. Any good comments, guys? A lot of good comments. I will make sure that everything is taken care of. All very good comments. And while you do that, we're gonna start with oil, and I'm gonna go through these rather quickly. I feel like the type of analysis I do isn't supposed to be taken too long, as I'm looking at more of the higher time frame. So if you guys remember my oil analysis from yesterday, I talked about how we are currently trading at support within a range. I don't really have a bias for the long term on oil, but I would say that short term to medium term, maybe intra-week, maybe even intraday, I was bullish yesterday on oil because of the fact that we were trading at these equal lows, at the range lows, and it looks like a good level to be buying. I mean, you want to be buying support, you want to be selling resistance. You absolutely do not want to be selling oil at these lows. You probably want to be selling oil up here on a failure to reclaim that support. So that's the daily, still at that level. Failed this gap yesterday or today, I believe. Now we're approaching the range EQ area. And what I don't like about this right now is the fact that we are between support and resistance. We're between the range lows and the range EQ. So I don't really have an opinion on this if we're going to go long or short. So instead of trying to give you a sort of sense of direction here, I think it's much better for me to just tell you as it is. I don't have a sense of direction, and days like these, if I would be an active oil trader, days like these are when I take a step back and simply ignore the chart and maybe add a couple of alerts where I'm interested. So one would be adding one alert at the high right here, and then adding one maybe back down at the lows. And if those alert goes off, I'll look at the chart and I ask myself, am I more interested now in trading this? So, and I think this is also important, on the subject of how to get funded and stay funded. This is the exact approach that you have to have if you want to be trading seriously and you really want to be making a career out of trading. You're not supposed to be trading all the time and taking all trades on all type of price action structure that you're seeing, that you might be saying to yourself, this might be something interesting. Well, if it might be something interesting, it's not interesting. The only trades that you're going to be trading is the ones that 100% is very interesting for specific reasons, and those reasons should be the rules of your system. So we're going to move on from oil here. We're going to be looking at S&P 500. Most likely, I'm going to have a lot of opinions on the S&P 500 right here. Very good questions here, right? Very, very good question, guys. Make sure that the comments continue to come in here, and we're going to be covering it all in just a bit. And make sure that while you are waiting for your chart request or your comments to come up and pop up on screen, make sure that you click that like as well. Remember yesterday when we had the giveaway, we gave away 2 accounts based on the numbers of likes as a celebration that we just hit 65K subscribers. And yeah, hitting that like will definitely be rewarded in future live streams as well. Okay, so the S&P 500, what do we have here on the S&P 500? We are now seeing, I'm going to start with the 4-hour here because I think, well, actually, you know what, start with the daily. Always start with the high time frames. We broke this descending trend line right here. We had a big bullish move to the upside, but a lot of people look at this as, this as being the high, and this is being the higher high. I've seen a lot of charts on Twitter and looked at a couple of YouTube live streams this morning, and I have a sense of people looking at this as the high that needed to get reclaimed. But to me, yes, this is an important level. It's an important level, but I do not view it as a major swing point. I view this as the major swing point that need to be reclaimed for the S&P 400 and the general market sentiment across indices turn bullish would be to reclaim this level right here. And that's the level at around 5,700. So I am still bearish on the S&P 400. And with that, of course, the other indices as well. Looking at the 4-hour here, we'll remove some of these levels here. Not that one. But looking at the 4-hour right here, I think we're forming some type of top pattern right here. Potential top pattern, I should say. We never know before it's confirmed. I'm going to mark out sort of a trend line here. And see that we had that trend line here, broke above that one, retested it once, retested it twice. We also have price retesting a local low right here. So on the intraday levels, what I'm looking for here is we have to go down to the 15-minute for this. If this level is broken, which it kind of looks like it's starting to break now, but I would probably have to incorporate that into this level as well. So right now we're using the level as support, but if we break this level to the downside, I think the next level for the S&P 400 to hit is the area around 5,590. So right now we have 2 levels of interest for the S&P 400. We got 5,615 as the current support. If this current support fails, I will be looking at the 5,590 level as the next intraday support. Now, this level is important because if this level fails, we could perhaps see a daily swing point come into play. And if that is the case, I will be looking at a move back down to 5,490. something like this. Now, of course, we do have the FOMC coming up, which is a very important event for all markets, especially well, not especially, but basically it's all markets, right? And the S&P 400 will most likely move based on what we're going to get in that FOMC meeting and the interest rate decision. But these are the levels that I'm looking for intraday and medium term as well. But I'm looking for more downside on the S&P 400. So going back down to the lower timeframes, the fact that we have free commissions on 0 commissions when trading the S&P 400 on the 5ers, I will open my MetaTrader here with the high stakes. I'm not going to be trading my main funded account today because I have that connected to a couple of EAs, and I don't want to be touching them. So I'm going to trade. I am going to trade the hyper growth evaluation, which I also have the EAs connected to, but I can trade that manually as well. Let me just. So I'm logged in on that one. Perfect. Okay, so we got that one right here. Oh, actually, it's in profit for some weird reason. Maybe I took a couple of good trades on the EA. Wow. Yeah. Okay. It did. Nice. Yeah, the last 5 trades have been profitable. This is the thing with trading with EAs. It's like you open the account and all of a sudden you're like, "Wow, that's a couple of good trades," you know? Everything has happened automatically. It's just insane. I can't believe I haven't done this more often before. Right, okay. So I'm probably going to take a trade here on the S&P 400 if it breaks down. Let's look at 5 minutes as well. It's the problem I'm having here is the fact that, you know, I don't want to be shorting here, but what I'm going to be doing is, man, this is very tempting. Okay, we're going to be looking at one minute. We know that we want to execute a short around this level. So what I'm going to do is I'm going to enter a sell stop like this. Down to, that's going to be the TP down here. So if price breaks below that level, and look at that as the invalidation. So I will be entering a sell stop for the S&P 500 based on this right here. I'm going to share my general MetaTrader instead. Make sure I share the right MetaTrader account. Should be this one. There we go. It's an EA that I've been coding myself. I have a couple of EAs that I'm running. But I got 4 EAs running on GBP, JPY, GBP, JPY, US30, Nasdaq, and gold. Okay, so here we see the S&P 400. No, this is not the S&P 400. This is the S&P 400. And we what's the idea here then? So my gonna enter a stop limit short. Zoom in here. And by the way, this position size, I do not share those EAs. This is my private EAs that I've been developing. I might sometimes, you know, share how they work on Twitter and talk about them But it's unrelated to the 5ers. It's something that I'm working on privately. Okay, so the stop price is the price at which the order will be. That's when the orders will come into the market. And if we look at the 1 hour here, the structure on the MetaTrader is a bit different than the structure that we had on TradingView. So I want that stop to be right here. We're going to go down to the 15-minute. Then it should put limit orders right here. And the stop loss, where did we want to have that stop loss? If we're looking at the 1 minute, we wanted to have that stop loss here, I believe. And then for TP, we're going to be adding, and I got something in my mouth. What is that? What have I been eating? Yeah, I can use move the line, I don't know. Right, so where do I want to have that TP? Probably want it down somewhere down here. Now we're going to go into the 1 minute and we're going to look at what is price doing back here where I have that TP. Right, okay, so I'm going to move that TP up a little bit. I wanted to TP right here. That's a 1.64. How much am I going to be risking on this trade? Let's do 0.25 on this one. Now I will enter the orders. It didn't enter. Is that because the limit price is below the stop price? Or is it too close? Or does it have to look something like this? Yeah, that's right. So the limit obviously has to be above price. So you have to have the actual stop order here and then the limit price right here, if I'm not mistaken. This is now the trade. When price hits that level, it will enter a limit sell right above. That should be. No, I'm not buying. I'm selling the S&P 400. That's the trade right now. I got my orders in on that one. I've started using stop orders more often because I've seen some of the EAs I have, some of the breakout EAs I have is using it, and yeah, it's very good. Yeah, it says I have. It looks like I have two. We have 2 active orders here, but I don't have 2 active orders. It says right here in MetaTrader that I have 1 order, right? So I think what it is it's one stop order, and once that stop order is hit, it's going to put in a limit order. And I think that's why it shows up as 2 orders on the chart. But if you look at the trading panel here on MetaTrader, it's actually one order. Actually, I'm honestly just this is GBP JPY. I'll get one order on GBP JPY. I can show you that one as well. What's up, William? Good morning and welcome to the live stream. Let me know if you have any questions. I can show you the GBP JPY trade that I have here as well. This is one of the EAs that have an active order in. This is a high time frame breakout EA. As you can see right here, it's quite simple. It basically looks at it goes back a certain couple of bars, and then it's using triple exponential moving averages, Bollinger Bands, and ATR to determine where which high it should enter the orders and when. So this is a buy stop, a stop buy order right here. If it hits that level, it's gonna execute a buy order, and that's the TP and that's the stop loss. All right, let's keep our eyes on this one. We have orders in for the S&P 500 for a possible breakthrough downside. It's most likely not going to be executed in the next few hours. But we're going to be keeping our eyes on that one. I might actually keep if this order has not activated throughout the news. I might actually keep it in, but then widen my stop loss. It becomes like a 1-to-1 risk to reward or something like that during the FOMC. Because I think we're going to go lower on FOMC. Yeah, let's switch over to Meta Trading View, not MetaTrader. And then right before, we're going to be continuing with the other pairs and some of the questions that I have on funding. But before we do that, let's run a quick little intro. All right, today in the Technical Mastery Show, we are going to cover a few important comments that we have regarding the question on how to get funded. And I asked those of you who are funded, what do you think is the most important thing that got you funded? And for those of you who are struggling to get funded, what would help you and what are your biggest issues? So we have a couple of very good comments here that I'm going to go through. This, I believe, is... So, of course, in trading, there's a lot of important things, okay? There's a lot of things that you need to pay attention to, and there's a lot of very important things. This right here is probably up there amongst the most important things that you need to be able to figure out if you want to make it in trading. So one of my biggest struggles in trading was over trading, right? And I believe it's probably a very common problem. Most of you watching here, if you are struggling to get funded, most likely you are suffering from overtrading. Now, overtrading can stem from overtrading is not an isolated problem. It can stem from different things like frustration after a losing streak, overconfidence after a winning streak, many different things. And instead of, I'm more of a practical person. So instead of, going too deep into the issues that are causing overtrading, I'm simply trying to look at it from a practical point of view. So which are the practical things you can do to help yourself combat overtrading? Now, one of the most obvious thing is like we want to trade less. Okay, so what I did in the beginning when I started trading and I felt like I had issues with over trading, I made sure that I created a rule for myself to never take more than a certain trade each day. For me, that number was 2, no more than 2 trades a day. And what I did was I focused all my energy on that small thing, that one thing. Do not take more than 2 trades a day. And if you do that over and over and over again, after about 2 months, it's going to become part of you. I mean, we say that it takes about 90 days for a human to create new routines and habits. So if you try to force yourself to only take 2 trades a day and you can stick with that, now I don't mean you have to stick with that every day. You can have some days when you're taking a few more trades, but the most important thing is that you stick to the overall concept for 90 days and you constantly think about it for 90 days and try to integrate it into not only your trading, but your everyday life. Really think about it, write about it, make make notes, post-it notes on your screens, only 2 trades a day. Make it part of your trading identity. And after 90 days, if you're following this, you should have a much easier time with overtrading. So instead of sitting there and like, why am I doing this? Why am I doing that? Trying to find different reasons for all of this, is be practical and ask yourself, it doesn't matter why I'm overtrading, but what can I do today to make sure that I create a structure in the process for myself to stop overtrading? That is, create rules for yourself. If you're a swing trader and you're taking on average, when you're following your system, you're taking on average 5 trades a week. Well, that's your max trade per week. If you take 5 trades and it's Tuesday, Wednesday, Thursday, Friday, you're not going to be trading because you've already took 5 trades. And if you follow that, you're going to think, okay, so if I take 5 trades on Monday, I'm not going to be trading for the rest of the week. So let's just take 1 trade on Monday. So I have 4 more trades to take the rest of the week. Having rules like that is super important. Now, the problem becomes, following the rules. And then you can start thinking about why can't I follow these rules? But if you have a clear process and a clear rules, it should be fairly easy to set up a structure for that. So that is a very, very good comment. Less trades, and then of course only trade the best setups. One thing that I would recommend that you do is if you're trading manually and you're trading with a system that is somewhat visual, like for example, we have a break and retest of a 20 EMA, I'm going to go long if they're bullish engulfing candle, and you have no indicators or EAs to alert you when that happens, you're trading from a very visual point of view. So you know exactly what the perfect setup looks like. So I want you to go out in the market, start backtesting, find the perfect setups, and then print out like 4 of the best setups, and then put them on the wall. Put them on the wall, close to your PC, next to your screen, or whatever. So whenever you're going to take a trade, you look at the prints that you printed out and you ask yourself, is this setup the same as those setups? Because those setups are the perfect setups. And if you can't see the similarities, then it's not a plus A setup. It's not the setup that you should be taking. That's also one key component to not over trading. It's going to be much easier to follow your plan if you know exactly what your plan is and have visual cues to remind you. Because we are technical analysts, we're visually trying to find patterns in historic price action that we hope will repeat itself in the future. We are a type of visual artists, right? We're writing lines and creating our type of. We're kind of like taking our creativity and just pouring it into the charts and visually trying to find examples. So print out the best setups. That's a really good tip. Okay. Yes, Henry. But it's not a myth. It's a really, so the average being around 66 days. I think. Yeah, but I that might be true. That might be true. But thank you for absolutely destroying my whole speech here. But you might be right about that. So it's not about, you just do 90 days. It's about creating the process, is following the process. But I think 90 days is a good time to do it. This is also a good comment, right? And on this, I would like to say failure or a mistake is never a failure unless you never learn from that mistake. So there's a difference between making a mistake and sorry, I just got a message. Why am I reading messages when I'm trying to talk? Yeah, so there's a difference between a failure and a mistake. When you make a mistake, it's important that you figure out why you made the mistake and make a plan for how not to make that mistake again. Then that's just a mistake and it's a learning experience. If failure comes from making a mistake and not realizing why you made a mistake, or even that you made a mistake so that you can improve, and that then becomes a failure. So it's important that when you make a mistake in trading, make sure that why did this happen, and then make a plan for that to not happen again. It's basically a way of trial and error, and that's a really, really good approach in trading. So as Jessica wrote here, I believed in myself blindly and ignored what other people said. Obviously, that's super important. You have to be humble, but have the confidence necessary to be resilient when no one else believes in you, when the market does everything it can to keep you unprofitable, when you have losing streak after losing streak after losing streak, and you're making mistake after mistake after mistake. You have to believe that it's possible. You have to believe that we have people that has gone from nothing to be profitable. Like, look at me, for example. And before I started trading, uh, before 2015, I had nothing, right? I had nothing. I had not a dollar to my name. I lost my apartment. I basically became homeless. I was, miserable addict, and I had nothing, right? I didn't even have a job. I had no money. I had nothing, and I became sober, and I kind of started building my life up again. And about 1 year after becoming sober, I found trading, and trading has for me been a vehicle to a better life. Not only financially, but it kind of trading let me it helped me see my flaws and my strength as a human being, because that's what you have to do in trading. You have to figure out, like, what are you good at, what are you bad at, and then try to leverage your strength to combat your weaknesses. And that's exactly what I did. And so I went from nothing, and now I'm here, trading, making money trading, working for the 5ers and all of that. So if I can do it, then 100% anyone can do it, right? So you have to 100% believe in yourself. All right. Because I'm just going through the comments. I'm trying not to speak when I read the comments, because a lot of times I just say the things I read. Okay, what else do we have here? What else do we have here, guys? Make sure that you don't forget to hit that like. I know I keep telling you all to hit that like, but it's such an important thing for us here on the YouTube channel. It really, really helps to grow the channel. I'm gonna put, while we go through the comments, I'm gonna pull up the MetaTrader here, show you that the S&P 500 is coming closer and closer to that order. What else do we have here? Letting go of fear and not risking more than 1%. Okay, so I'm just going to say 1% is way too much. Now, we have some people saying, oh, some people, they can risk 1%. No, 1% is way too much, okay? You're never going to survive long term if you're risking 1%. On the hypergrowth account, the stop at level is 6%. On the high stakes account, the stop at level is 10%. You're not going to tell me that you're not going to have a 10 trade losing streak. If you stay consistently with 1% risk, you're going to lose the account. Okay, I'm just going to tell it as it is. You should not risk 1%. On your personal account, risk 1%. I'm risking sometimes 10% per trade on my personal account if it's high conviction. On your personal account, you don't have the stop out. You can lose 15% on your personal account, 20, 30%. It doesn't matter. But when you're trading for a prop firm that has specific rules that you need to follow to be able to stay with us long term, you cannot risk 1% on your account on a trade. Okay. Now, what you can do and what you should do is to follow a risk management system that is based on fractional risk, the approach that Victor talks a lot about. And we have videos on that on our channel where you can go in. Now, I'm very, like, when I talk about trading and trading education like that, I'm very direct. Some people are going to say, well, maybe you can risk 1% per trade. Give me an example of a prop firm trader that is risking consistently 1% per trade and they have been funded long term. We're talking about years, not months. Funded for years on an account that has no more than 10% stop out. They're risking 1% per trade. You show me that and I'll be very, very impressed. TradingView is now breaking the levels. We have MetaTrader about to perhaps break lower here as well. TradingView has a strong push. So I'm looking at TradingView on Oanda. We're looking at MetaTrader here for the 5ers. Oanda is seeing a push down on S&P 400. It's recovering though, but that's the S&P 400 on the 5ers are lagging behind a bit. And we're now seeing continued movement on Oanda pushing lower. We should see S&P 400 here push lower on the 5ers as well. No, it's recovering, but there's definitely a momentum push to the downside. Here's one of the reasons why I want to have my stop orders way further down than, right before the level, because I would have been, if I put it right below that wick, I would have been filled. But I want to make sure that I have it well below that level so that when there's a push to the downside, I get filled on that order. There should be no fear in trading. If you're fearful in trading, you're not trading, okay? Then you're placing trades based on emotions. You're placing trades based on your fear. You're hoping that your trade will go into profit because you're fearful of losing money. If it doesn't go into profit, you're going to close it earlier. If you are fearful when trading, stop trading. Work on that. One good way of doing that is reading the book that I talked about, this one right here, Trading in the Zone. Great book. Read that one and have a system. Okay, that's the key. I haven't even mentioned that because if you don't have a system, if you don't have a clearly defined system with backtesting data to back up its profitability, you shouldn't even be trading. So that's the first step. So when going through all of these comments, I already assume that you have a system. Okay. And then read this book, because in this book, you will learn things like, for example, every new trade is a completely new occurrence. It has nothing to do with the previous trade. Every new trade, the outcome of every new trade is completely random. It's basically 50-50. You have to have that mindset. You follow the system, you go into the trade, but the outcome is completely random. So there's nothing to fear. There's nothing to fear because the market will do whatever the market wants to do. And your job as a trader is just to listen, observe, and follow whatever the market tells you to do. The S&P 500 is showing some signs of support at this level right now. We're seeing a support price action showing us that it wants to use this level as support. I think I might have my orders a little bit higher, a little bit too high, because I want to see, I want my orders to be filled on a breakout move, not a sideways, like a level where it's been used as support. But we'll see. I think I'm going to keep that order in. Oh man, we've got a lot of questions here, a lot of comments. Let's see. Fear is normal in trading. Yeah, fear. Yeah, fear fear is normal, definitely. But I don't think it's about managing the fear. It's just about not acting on it, because fear is a normal human emotion. We can't let go of fear. We can't really, not feel fear. We're always going to be feeling those, general basic emotions. But I think what we need to do is we need to, whenever we feel that we're fearful of a specific trade, we need to acknowledge that we are fearful and then think about how do we act on the emotions, because it's two different things. What we feel and what we think are completely different things, right? So we have to try not to connect the thinking with the feelings too much. So we feel an emotion of fear, and then we start thinking this has nothing to do with the actual system. The system is fearless, and the market does not convey emotions. The market actually does not do anything. It's just a way, and the charts are just a way of showing data. Okay, it's just data. There's nothing to fear at all. As Henry says, this is also very important. Thinking small and focusing on the process instead of the profit. We're all going to be thinking about the profits, right? I think it's impossible not to think about the profits. So it's like saying that don't think about the profits. It's like, well, what else am I supposed to be thinking about? It's like I'm trading to make money. I'm obviously going to be thinking about the profits, but it's also very important to realize that the profits comes from following the process. So making sure that you think about what happens today, not what happens next month or tomorrow or next week. Think about what happens right now in price action. What can I do right now to make sure that I follow the process of the system? So right now, I think if you're working on risk management, I would highly recommend that you go to our YouTube channel and you search for a risk management video by Victor. A little bit later in the live stream, I will link that video in the comment section. Very, very good video to help you with risk management. Here we are back to overtrading, right? Back to overtrading as one of the major problems in trading, right? There's many different reasons to overtrade, but again, we should not focus too much on the reasons we overtrade, but more about creating practical rules to combat overtrading, and that would be rules per trade. I think one thing you really want to do is, good morning, Maria. Back to this question. Okay, so yeah, I think what you want to do is you want to make sure that you're comfortable with losing every trade. As soon as you see a setup and you put in all the orders and you start calculating your risk and you look at how much you're going to be losing on this trade if it hits that stop loss, ask yourself, am I okay with losing this trade? And really be honest. You can't just say, of course I'm ready to lose whatever I'm risking on this trade, but you have to be really honest. You have to really feel, when you ask yourself that question, visualize yourself losing money. Visualize yourself, the trade hitting that stop loss, you getting the notification that the trade hit your stop loss, and you're seeing the money getting out of your account. And if you feel any type of negative emotions towards that, you should not take the trade. Instead, you need to work on accepting that loss before you enter a new trade. Because if you're not, then you're not thinking from a probabilistic point of view. You're thinking and you're trading more on emotions. This is a good question. So if you're not going to be risking 1% per trade, then how much should you be risking on your account? Well, again, I think what you should do is let's do a quick explanation here. I'm going to move over to TradingView so I can write a couple of things on the screen here. Okay, so you have a 100K account. We have a 10% stop out. Which is 10K, right? So you're able to lose 10K. That's the risk you have. So available drawdown is 10,000. Now what you want to do is you want to look at what's your drawdown of your account. No, what's the drawdown of your system. We all have. Now you have a system, right? And you've back tested the system, and you know what your max drawdown of your system is in back testing, and you know what your max drawdown is in forward testing. Now, again, if you don't have the back testing results, get the back testing results. Otherwise, you're not going to be able to do this. Then forward test it for a month or two, so you have the forward testing results as well. And you see that your max drawdown on your system is 10R. So you want to assume that that max drawdown is not your real drawdown. Your real drawdown is actually 15R. The max drawdown of system equals 15R. And what's your available drawdown? That's 10,000. 10% of 100,000 equals 10,000. 10,000 is your available drawdown. This is just a very simplistic way of doing it. In the video where that Victor explains all of this, it's much more detailed. But what you want to do is you want to take that 10,000 and you want to divide it by 15. 10,000 divided by 15 equals 666.666666667, something like that. Let's just do, for simplicity, let's just do 700. No, 600. So if on a 100K account you risk $600 per trade, and you have 15 trades in a row, you're not going to lose the account. But then, of course, Louis said something very important here. Don't forget about the daily loss. Now, personally, for me, I think that $600 per trade is too much, because that's more than 0.5%. So I would be risking much less than that. And I think Victor talks about risking like 1% of that 10K. So I would probably be risking more like I would probably be risking more like $250. Because if we take 250 times 15R, $3,750. So I'm getting nowhere close to that. But this is a max drawdown. Doesn't mean that it's 15 trades in a row. But I would be very careful with risking that much. I think for me, 0.25% is good. Now, what you want to do as well is you want to be dynamic here. You want to increase risk when you're when you have 15R available. But what if you're already down 10R? You're already then down 10R, right? And then you have 5R left, and then you take the available drawdown and divide it by 5R. So you're dynamic in that sense. I believe that's the way that you want to do risk management. Is the daily loss calculated from the start of day's balance or the max drawdown on the day? I'm not sure I understand the question. I think it's the yeah. I'm not sure. What's up, Pedro? How's it going?
What's up? Good morning, everyone. I'm good. How are you doing, Jonatan?
I'm good. I am good. I got a short order waiting here on the S&P 500. Hopefully, we'll get a move to the downside. I'm thinking that we'll see a dip here on the S&P 500. So I got the buy sell here.
You mean the sell stop?
Yeah. Yeah, oh, did I say buy?
Yeah, I said the buy sell.
Okay, yeah. Sell stop.
Yeah, the indices created kind of a double top right yesterday night.
Yep.
Just the timing of the move was well. It's just weird. Both the high and then the double top both were created kind of after 8 p.m. or something like that. Like who's still trading at 8 p.m.
Right. Yeah.
Oh well. There it is.
All right. What are you looking at today, Pedro?
Yeah, I was looking at the indices. I mentioned yesterday that I was trying to find the short in there, but again, the timing of the move, I was no longer at looking at the charts. Yeah, and I'm going to continue. I think we can continue to go a little bit more. I'm just hoping for a little bit of a retrace before joining. So that's a little bit gone, and both at S&P, Nasdaq, even the Dow as well. Just waiting. Hopefully we're going to retrace a little bit more to the upside. Before that, gold is interesting. Gold also made a big move to the upside, right? We are let's see if we're going to get closer to 3,400 or 3,000. Yeah, close to the top. We'll see. And if there's going to be any kind of sales in there or not. Yeah, and regarding to the dollar, euro dollar, pound dollar, it just stays the same. There's nothing new going on in there. So again, I'm not really interested in trading anything regarding to the dollar at this point. But the yen pairs, actually, they made a good move overnight as well.
Yeah, there's been some real movements on yen, definitely.
Yeah. I may try to find if there's any long opportunity. We'll see.
Yeah, I think on USD JPY we might see some potential long opportunity.
Yeah. I'll try to find for that. Yeah, if you share my chart just to see the end, I think we mentioned yesterday.
Yeah, you need to share it on your end first.
Oh yeah, sorry.
We have a Claudio asking about GBP JPY as well, so maybe we can look at that.
Yeah, you can look at that. Yeah, okay, got it. Yeah, on the end pairs. So yesterday when you were here during the stream, I think we were somewhere around this level or something like that. And I was looking for price actually to make this last move into this next structure, which is we are here right now. Now the move was quite aggressive, so I still need some kind of confirmation that actually price wants to turn in here. Maybe price just wants to continue. So I need a little bit more of price action within this level to see if we are going to actually find bearishness in here, at least to maybe just to test back to this level where it was yesterday in the afternoon. So that could be one of the first opportunities. So if I'm looking potentially for this move down, then yeah, I'm going to be looking for potential moves ups on the other yen pairs. So the dollar yen so continue. So I was waiting for dollar yen also to get a little bit closer into this range in here, which is also reacting. So I'm going to be tracking to see if there's any kind of opportunity to look for longs. Even though my ideal yen long, it will be actually price will just continue to move and eventually somewhere around this level to look for a bigger move up. That would be my favorite opportunity. But for now, there's maybe opportunities to look for a test of this level. We'll see how that plays out. The pound yen, someone is asking, what's pound yen doing? The pound yen, just look a little bit more into the higher time frame. Because we had a big move down and then price retraced. So price made out this big move to downside, respected this basically that demand zone. It came all the way up and now retested into this structure. So yeah, if the yen index actually wants to go lower from here, maybe pound yen can find some momentum in here or some reversals within this low. So that could be a possibility. Was that for a long or a short on pound yen? He didn't mention.
Claudio. No, I think no. You just wanted to have like analysis.
Oh yeah, okay. Yeah, it could. There could be some reaction from me. Something that I still don't like is that price on the way down. It has been respecting the previous highs, so there's not exactly any signs yet of reversal. But if price kind of holds this level and starts breaking above this level, maybe we can have the reversal in here, or some kind of reaction. Yeah, this could actually, maybe even Vitor would consider this a kind of a quasi-model in here. Kind of the pattern is there. It's just question is where is this all reacting from to validate that quasi-model or not? Because that's sometimes a tricky part of the quasi-model pattern. But yeah, if price kind of starts breaking in here, or if it creates some structure, kind of goes down and then breaks again, maybe that could start leading into some reversals. In the on the end pairs, actually is moving to the upside right now on the 30-minute time frame, and I think that's going. Wait, where am I going in here? I think that's quite similar as well on the dollar yen. Yeah, what is Aussie yen doing, by the way? Yeah, it's moving down as well.
Looks like it's retesting a pretty good level there. If we can on ADJPY, if we can get a bounce around 92, I think that would be a nice long.
Yeah. Just the Aussie, yeah, because the Aussie, I'm still a bit bullish on the Aussie, so if Aussie dollar could also push a little bit more to the upside, that could also help Aussie yen, plus yen dropping and this one moving up. Yeah, I'm going somewhere around here can be interesting for a move. Yeah, somewhere around here could be interesting. It used to be one of my favorite pairs to trade, actually, Aussie yen. I really liked it in the past.
Yeah,
But then I just
ADJPY has been an incredible trade. Like before COVID, I traded ADJPY very actively
Me
because it
too.
was like one of the best trending pairs out there. It just went up, It's just all those went
Yeah.
up.
Yeah, but I think I used to like the price action as well. Like the overall price action, it was clear, it was simple. There was no fake outs or many manipulation going on with the pairs, which is nice.
My order is about to hit, so I'm just going to switch over quickly to
go ahead.
MetaTrader. So Hamed, you were asking if my pending sell hit. No, it did not. It's sitting right down here below that wick. So just waiting for the spread to fill it. We'll see what happens here.
Yeah. Claudio, you asked me about my confirmation. I wait for breakout structure. It's not exactly candlesticks, or I don't pay attention to any candlesticks formation. What I want to see is breakout structure. Okay, so if price is approaching a level, then I want to see, at least on the 4 time frame, that level starting to be broken to the opposite side to look for a trade. That's a little bit of the confirmation that I'm going to be looking for. Mark, if you're asking, like, yeah, this is in hindsight, right? If you want me to be specific, you need to kind of mention the specific levels that you want me to look for. But I'm not really interested. I'm waiting a bit more for confirmation on the end pair. It's not something that is completely on my radar. The ones that were on my radar 100% was the US indices yesterday when I like in the evening when I finished my analysis. But meanwhile, price already made out the move. Now I'm waiting. I wish if price comes back into this level, I'll try then to look for something like this to happen. Okay, maybe it still can react from this supply, can react a little bit from here, and I'm going to be looking for something like that. Maybe retrace back into the London Open for a move. Like a lot of the move that I wanted to see, I explained it yesterday that it happened already, and it's like I need to wait now. That's kind of my style of trading. If you want to see, if you want to talk about something specific, we can.
Yeah, I think on the subject of today's live stream, we're talking about how to get funded and stay funded. I think we covered a lot already, but maybe you could, if you want to talk a little bit about how you get funded and how you manage to stay funded. What you think is what was important for you to get funded?
Yeah, it was. Yes, risk management is a big part of it. I like to start kind of risking a bit less, get some buffer, and then kind of increase just to feel comfortable within the challenge. Like I think one of the issues sometimes is when people start straight away in a big drawdown, and then kind of they just give up and then kind of lose the account just to restart a new one. So start slowly. We create a little bit of a buffer and then start increasing risk. That's something that I did. I know that many other people, many other traders also did that. A different approach, and I think something that matters as well, especially if you're talking about getting funded with the prop firms, and it can vary for everyone, is what are your circumstances outside trading? Like, do you have money to spend in challenges? Do you feel comfortable? Like, do you care at all if you lose a challenge and are you going to just buy the next one, or the challenge actually that you are buying and trying to pass is kind of really important for you because maybe you need to wait another 2 or 3 months to save money before actually go into are able to even purchase another challenge. Like the approach in that, like between these two scenarios is completely different. The second scenario is going to be more conservative. It's going to take or feel maybe more pressure to actually pass the challenge, and maybe it's going to reduce their risk size that they are taking on this position. The other trader doesn't give it doesn't care. it most likely is going to just starting to risk 1 or 1.5% on each trade, and the only thing they want to do is just pass the challenge as quick as possible, because I feel that's a waste of time to just try to pass challenge in a slow, slower. So that would be different. Now, the important part in terms of being or sustaining the account is that's the reality of trading, because passing challenges, it's quick. Like there is a reset button. If you destroy the account, you buy a new one, and you keep going like that. When you get funded, you need to be consistent in there. That's the reality. It's no longer about trying to pass challenge in 1 week or in a couple of trades. No, it's about actually being consistent. And now it's a matter where if you do have an edge or not in what you are doing, and treating trading actually in the right way. Because it's a completely different story between passing challenges and actually stay funded and kind of building a track record, if you want to talk like that in the long term. Which unfortunately, the mindset of trying to pass challenges, it can actually deviate then the trader to actually stay funded, because the approach and the mindset is completely different. Because they know that you have a reset button, and there's no reset button in trading. Like if you are trying to build a track record, if someone gives you money to trade, you're not going, sorry, I lost 10,000. Can you just deposit a new 10,000 into the account?
Yeah.
Like, it doesn't work like that. Right? Most likely did, okay, you are gone. I'm not going to give you any more money. Goodbye. Like that shift is really important. And many traders are still just thinking about getting funded, not knowing that the mindset that you need to stay funded, it's a completely different approach.
Yeah, definitely. It's I see a lot of people talk about like, okay, if you're in a drawdown on the challenge account, let's just get a new one, let's just get a new one. No, I think getting out of that drawdown is a really, really good learning experience. I've been in drawdowns on funded accounts and evaluations, and I've never given up. It's not like, okay, I'm just gonna buy a new one. No, it's you need to be able to show that you know how to trade, and to get out of a drawdown, it builds confidence, and it shows that you know how to trade, your system is working. And you're going to have drawdowns in live trading as well. And like you said, if you're used to just getting a new account, might be becoming a bit problematic.
Yeah, and then I'm apologist of like the way you do one thing is the way you do everything. So if that starts becoming, and you talked about habits before, right? I don't know how long does it take to create a habit, but if that's the habit that you start creating months in a row of always, okay, just need to get funded. If I destroy my account, no worries, I just get a new one, and it keeps going like that. And you are not focused actually in trying to survive and actually treating trading more carefully. Then when you do get funded, then you completely need to change your mindset again. Like, and now it's going to take again, I don't know, 60 days, 90 days, whatever time it may be, to actually then create a new habit to actually treat trading accordingly, to actually stay funded. That's a big problem. That's a really big problem.
Yeah, definitely. All right, what are we? Can you take a look at the USD/JPY? I know we had a few guys talking about USD/JPY. I want to see your breakdown on that.
Okay, so let's be specific in here. So price is reacting on a bigger time frame. Okay, in the higher time frame, price is reacting from a really good level. Okay, price broke actually, basically reacted from these lows. When you're looking into even a bigger time frame, more daily or weekly time frame, considering all the price action that we're having here, we actually created this top, we had this low, and price actually came all the way and actually managed to break this low. So I've been a bit bearish on the dollar yen since we actually managed to break that structure. Then typical move, price retrace all the way back, basically created the double top, which kind of starts confirming that my price eventually wants to go even lower. So higher time frame, you talk about daily or weekly, I'm a bit more bearish on the dollar yen, expecting actually eventually for price to go further down. Now, price came all the way back in here. This was still a freshman zone on my eyes, which means that price eventually could bounce from it, and it bounced. And that's actually why I was actually looking for a potential trading here on the dollar yen as a long. As a confirmation as well for that is because price was already kind of starting to break a little bit of structure, so we had already break of a high. Even though the approach in here was actually quite good, not the kind of breaking there. So it started to show a little bit of the buyers were kind of getting a little bit in control, and that was one of the reasons. So since then, what did you have? Price actually managed to go higher, right? So it managed to go all the way up until basically this level. So it started to break that structure. So then you potentially could continue to look for more longs. I think you got one in here. That was maybe a good entry. Again, I like to trade closer to the walls, so I'm still even hoping. That's why I mentioned that my favorite entry for a long maybe could be if price actually comes back in here. But okay, price now created this top. I'm not the biggest fan where this top is reacting from, which means I think price can still continue to go even a little bit more to the upside, and maybe can even retest closer to this top in here, or even to this next structure in here. So I would like to see actually the variant continue to move a little bit more to the upside in here. And now we had this demand zone. Okay, so basically this is the decision point that managed to break out this structure. So usually this can be an interesting or important level in here on the dollar yen. And we are here. Okay, so yesterday price was around this level. I mentioned that I was still waiting for price to go a little bit lower. Now, if you actually pay even more detail into this, so this was basically a little bit of the demand zone. Price reacted from it and skyrocketed from here. And price is somehow reacting from this level. If price by any chance creates actually a new low in here, and maybe this is already that break of a low, it starts being compressed. Because the way I see it, this is we have one demand in here, price reacted from it. We have another demand in here, price already reacted from it. So basically, almost all the orders have been collected at around this level, which makes it a little bit weaker. And price may have already broke into the compression, which means that maybe price eventually can continue to move a little bit more to the downside. And as we are reacting from this level, we are not exactly reacting from that level. So what we have a move to downside, and price now kind of reacting from, or it can go back to this supply level. So that's a level that potential price can just bounce from. Now, I don't really like to trade these bounces. So that's why I was not really specific before, because I don't like to trade just these bounces. I like to trade extremes, and extremes means like close to the highs, close to the bottom, and that's it. I don't really get involved, even though I can see space that price can bounce between. I usually don't really get involved in these moves in here. But if you want to look a little bit for confirmation, yeah, maybe price can break above this level, price can retest this level and go here, since the next previous zone somewhere around this zone in here. So price now could bounce between these two levels as much as you want. You can maybe find intraday trades in here, or scalps, or whatever you want to do at around this level, and all good. If price starts breaking below this level, I'm looking for price already to go and target this level instead. And you can either break out, continue, or whatever, price breaks, comes back into this level if it's still fresh, and go. So this could happen. For example, price could now break it, create this top in here, goes up, reacts from this level, fakes out everyone in here, and just continues to move to the downside. So that could happen as well. It depends what you want to look for. Yeah. Am I going to look for any longs in here? Most likely not. The price moved in here is already full compressed, so I'll be even looking for price to break below this level, going somewhere in here, or then my favorite, which would be close to these lows in there. And that's basically what I'll be doing in here on the end. Attention to this level, price is still respecting that level, and that's it. If price starts breaking above something in here, then yeah, maybe this level is going to hold, and price is ready to go higher, which could be everywhere close to that level. Yeah. So
yeah, like what you said about, like what you said about being trading at the extremes, at the highs and the lows, making sure that you're trading, not between high time frame support and resistance, but on the on the actual levels. I think that makes a lot of sense.
Yeah, that's what I feel comfortable with. Many other people trade in between, and it's totally perfect. It's like just everyone can choose their battlefield, basically. You just choose yours. Like wherever you want to trade, you trade it. It's not because I can see that maybe there's a potential move that maybe price wants to feel. I don't want to get involved in that. Maybe I could have made more money like that, but there's more stress. And what happens to me is that sometimes when I do get trapped into trying to trade these smaller moves, I then lose the sight of the bigger picture, and maybe I'm trying to cut in here 20 pips, and then I could have got like 100 or 150, whatever it may be. And because when I'm trading in here as well, I'm looking for smaller targets, or maybe, I don't know, 2-1 risk reward or something like that. And even if I, by any chance, now I'm catching a good trade maybe from this extreme, because my mindset is still kind of thinking about just a smaller target, I may just close the trading here and price just goes all the way. So that's something that I learned with my own process, just the way I trade, and yeah, that's what fits the best for me. Yeah.
Yeah, definitely. That's super important to make sure that you're trading, trading the way that works for you.
Yeah.
Bro, let us know in the comments if you have any. Well, we have gold. A lot of people are. Do you have any? I want to look at gold. Maybe you can share your perspective on gold as well. It's showing us a really powerful breakout. It's weird because my EA did have orders set on gold to buy that breakout yesterday, but then it removed the orders for some reason. Not sure why. But yeah, it's gold is looking incredibly strong.
Maybe the leverage sometimes in the moment of the executing, I don't know what account you're trading, but sometimes it if the leverage is not there, I think it cancels the order.
I think it's something. It's something with the EA. It's using. It's probably has something to do with one indicator doing something, and then it decides that it's better to remove the order. I don't know. I'm gonna have to look into that.
Yeah. Yeah. Gold. So, what do we have on gold? Let's look at bigger picture first. Yeah, gold. My conflict with gold is if I'm actually still trying to think about bearishness on the US indices, it may not make sense to also look for bearish gold, right? Because in theory, gold may actually just continue to go higher if we actually start having a more move to downside on the US indices. So I need to have that in mind, but that's my bias. Now, looking at the chart itself, I may like two levels to potentially look for shorts if that would happen. One, it will be maybe somewhere where we are right now, kind of around this structure. Now that we managed to break this, structure, I think many people are going to be looking for breakout setups towards the highs, okay? Because I think that's one of the most natural thought process that everyone has is break now the structure and let's start aiming towards the highs. So we have, especially if we manage to break it in such momentum like we did in here, okay? So kind of break, retest, and potentially continue. So if that was about to happen, if that's kind of the normal thought process, that would be great actually to then fake out everyone in here and actually start pushing gold to the downside. But I would need to see breaks of a lows in here, and I haven't seen it. For example, if you do manage to break again below this low, that could start the reversal. But attention, because we still have this demand zone that price can still react from. But as a counter trader and kind of just to play with manipulation of kind of manipulating the emotions of the traders, that could play out, because I believe many people are now looking for longs on gold after the breakout. So we'll see. But for that, again, as I mentioned, I would need to see some kind of breakout in here and price then finally turning, and maybe can come back into the fear in this range again. Okay, so that could be a short. Otherwise, price will just continue and will just continue to go higher. And in the next scenario, I'm going to be looking a little bit higher, close to the highs, to see a potential reversal. Even though, again, trying to short all-time highs on gold, kind of as a double top, I don't feel comfortable doing that. And as I mentioned, if I'm still kind of looking for sales on US indices, maybe gold actually eventually is going to even continue to push higher. So I really would need to see a proper kind of manipulation in here to look for a short at the highs. But yeah, that would be this. These have been the two levels that I've been waiting for on gold. So I'm curious to see what's going to happen now.
Yeah, it's gonna be. It's a. And it does look like a nice breakout. So I think we're definitely. I feel like we're most likely going higher from here. I mean, when gold starts to run, when gold starts to break out, we've seen previously it. Shows us a low to medium time frame reversal pattern, and then on the daily it's just a higher low, and then it just shoots up. So gold is extremely bullish. There's nothing bearish about gold, and every single time we have a a throwback on gold, I'm like, why am I not buying?
Mm-hmm.
Why am I not buying? It's like every single time I miss that buy. I want to buy gold every time it retraces, but then I'm like, it has some good levels below. But then when it has the momentum and when it gets going, it just leaves everyone behind. And I feel like that's the nature of gold. It likes the surprise in both directions. It has a big move to the upside, or it shows a big move to the downside, basically.
Yeah. But again, that's something that I usually look for as well, is when it kind of makes completely sense that price would now start to move in one direction. And sometimes it doesn't. So that's kind of, I'm looking for the sometimes it doesn't. And I have clear things that I want to see to confirm that, so I can take actually the counter trend trade. Now, I prefer if actually price is reacting from a good level on the left side. I don't really see anything relevant from the way I look at it on gold at this point where price is reacting, but I think there's potentially enough liquidity as price is breaking above this level to potentially at least find some shorts. But I'm not going to be forcing it. I know that I need to wait for some confirmations before actually taking those shorts. Otherwise, I'll be killed alive with so many losses trying to just fake every single thing.
Yeah.
Yeah. Yeah, but that's just something.
All right, Victor, welcome.
Yeah, Peter. Morning.
Hello. How are you
are
guys doing today? It's my first day of the week. Yours second.
Yep. No, we're all good, man. How are you?
I'm as good as can be, or as well, should I say?
All right.
So hi Haresh and everyone else watching us today. Don't forget to hit the like buttons. We would like to see for this week double the views. Let's see if we can make it. Let's make it a challenge.
Let's do it.
It's now it's a viewership competition. We're competing with last week's viewership, and let's see if you guys can win from last
that would
week's
be awesome.
viewers.
I'm gonna leave you to it, and I will be back a bit later. All right, guys, take care.
Thank you, Jonatan.
See you, Jonatan. All right. So, how have you been, Pedro? It's been such a long time. At least that's how it feels. How have you been?
Yeah, all good. Relaxing over the weekend, and again trying to find shorts on the US indices. That has been my pursuit. So still didn't manage to get in, but hopefully price will retrace again closer to the high, so I can try to find the opportunity. But yeah, that's been a little bit more of my bias this since last week, actually. Even though last week price just continued to move higher. I did manage to catch some trades because even though price was moving to the upside, there was still around the US Open good reactions up and down. But then eventually price did manage to continue to break even higher. But in my views, we are still around the same levels. We are still at good levels, so that's still levels that I want to try to see if you are moving forward. But main point is tomorrow. Right? I think everyone is waiting for tomorrow, so we'll see what will happen with the FOMC meeting tomorrow, because that's going to be the big one. But how are you? How is what have you been trading?
I have been scalping. Yesterday, I had sort of while I was away. Yes, while I was away, I was scalping the market. Of course, with very little risk. And with a sort of an adapted way, but the market pushed against me, so I had to take a couple of losses. But it's about 2 days of profit in terms of the scalping, because I don't mix the strategies. So it's okay. I mean, you have those down days as well. It's part of the business. It's nothing unusual as long as you keep the frequency of these lost days, these red days, in a healthy or in a profitable ratio to the win days, right? Currently, I actually was on a something like a 10 winning streak day, and this was one of my first day in the last 10 trading days that I was scalping. So I would say it's still very, very good. But of course, no one likes to have a lost day. But I mean, what can you do? It's part of it, and we need to be matured and cut the losses when we see it no longer is what we expected it to be, and just move on. And actually, to during today, this morning, because the losses were basically yesterday, I actually made up already a third of that loss. So it's I mean, it's okay. How have we been doing? Busy as always. So
Perfect.
Hamed, we have
On the scalping strategy, are you still using around the same strategy, but just on the war time frame, like super war time frame, or is it something different?
yes. Basically, I am. Yes, I obviously it's not the same. It's not as systematic. It's not as strict, with a clear signal and things like that. No, it's much more discretionary, but it is based on the same concept, because as we all know, these concepts, they work on every time frame, right? It
Mhm.
may be we may have more noise on the lower time frames, but those structures, those reversal patterns, those order blocks, those quasi, they occur everywhere on every time frame, no matter how high or low you go. And that's exactly what I do. So I trade those fresh order blocks, those quasis. I go with the daily order flow, and I pick my slices along the way, and it's very, very profitable. But hey, you do have lost days as well, losing days as well. So but we'll see how I haven't, to be fair, it's only been recently that I've been doing this on the lower time frames. I'm a day trader, holding trades for a couple of hours, not scalping necessarily. But I'm looking into perhaps combine it with my
Mhm.
other strategy. And of course, there's not enough hours in the day. But this is because the size is small and you're only taking little slices of the market. You're in and out, many, many times, dozens of times a day. So I can do that, in between things I do, right? In between signals on my main strategy, I could go and scalp a little, come back, and so on. So it should be okay. We have someone asking a very profound philosophical question here. Why is he wearing a mask? I'm going to ponder on that question. I'm going to ponder and I come back when I get an answer. Thank you, Alice, for asking. Very good one. Let's see. We have
That's a
very
check mark. Like it's every week at least one person asks for
yes,
it, so that's it. This week
yes,
is done. Next week, now
yes,
again, same question.
yes. It's something actually. We typically have at least one person asking that question, and that's exactly why I have the mask. Well, I was going to wait for the rest of in a week's time, but that's exactly the reason I have it. It's because I get to call myself the mask trader, right? Without the mask, no name, no mask trader name, right? So there's only one way to be called the mask trader. Guess
Exactly.
how? No, but it's fine. Thank you all for questioning or asking that question. It's fine. I don't. I like those questions all the time. Yes, we have them at least once a week, once a day, actually. For other people, it's a sign of Batman. Maybe I am. Maybe I'm. What's the character again? Maybe what's the character again? What's the name? Do you know the name when he's not Batman? What is he again? I don't
What's his
remember.
name?
Yeah. Maybe
Whatever.
maybe in the chat they can help us. But anyways, in any case, I might
Yeah,
be
Bruce.
seen as a
Exactly. Bruce and Wayne.
Bruce
Exactly. Bruce
Wayne.
Wayne.
Exactly, Bruce Wayne. Maybe
Exactly.
I'm sort of a Bruce Wayne, right? Who knows? And that's the reason behind the mask. I'm out here trying to catch the bad forex trades, not catch them but I mean fight them off, basically, not catch them, catch the good ones and fight the bad ones off. Just trying to make a silly joke here. All right, so all right, let's see. Let's
Someone asked
continue.
Naitik.
Yes.
Naitik, I hope I'm pronouncing your name correctly. It's kind of asking, yeah, exactly. What's the criteria to join? I think the best thing to do is to email Jonatan, I believe. I think there must be an email somewhere in there. And maybe then Jonatan decides. Kind of his final saying is Jonatan. So, but I think the best way to be is to send him an email. I think maybe then he can have a conversation with you, I guess.
Yes. To be fair, I don't want to quote a wrong. Let me ask Jonatan for the live stream email.
Yeah. Hey, but it would be great if you want us to join us. Perfect.
Yeah. So we're gonna put we're gonna put the email in a little while, and anyone, if you think you have something, either I don't know, you passed the challenge and you did it in a very specific way, and any special way, you are reaching those milestones, you think you can teach or share others, with others your style and can be beneficial to them, reach out to us. We are constantly looking for traders who are doing it well, and who would like to share that with the audience, with or without a mask. So let's see. Alice here is asking, how do you get funded and stay funded? Okay, that's a very
that
very
was
good.
That was the topic of today's Jonatan in the morning.
Okay.
So basically,
Okay.
yeah, but basically that's, I don't know if obviously is making a reference to the session that we already had, which was an interesting conversation with many people commenting also on their struggles and yeah, and how did they get funded and how they stay funded, which is really important.
Well,
I don't know if you want to elaborate on that, Victor. I already Jonatan already asked me that question. If you want to elaborate on yours, you can.
Yeah, I would say it's not a simple answer. It's, in order for someone to get funded, of course you can wing it and gamble over risk and pass a challenge like once. But I'm not talking about that. I'm talking about actually properly trading, consistently and passing a challenge. In order to reach that level, it's not just one thing, and it's just not your strategy, and it's not just risk management, it's not just your personality or your mindset. It's not just one thing, it's everything. Because if you're missing one of those things, you will stumble. Your performance will stumble. And getting funded is depending on how much the strategy, how profitable it is, and what's the expectancy, things like that, and the frequency of trades. I would say, getting funded once is a great feedback that you're doing things, at least for that period, well. But you're not there yet. Just getting funded is just one step in many steps to success. And as many traders will tell us, what is getting funded is not easy, but it's done frequently. But getting payouts is much more difficult. Not only that, getting multiple payouts, let alone consistently getting payouts, it's very, very difficult. Why? Because you have to have everything in place, optimally functioning, and doing it not just one period, but every period after that, right? And there's so many things that can go wrong. So I would say how to get funded is getting all your ducks in a line, right? Meaning you got to have your strategy needs to be well validated, needs to be well defined, having a trade plan, having data, having enough sample size in your data set, either back testing or forward testing, doesn't matter, but enough data, and your risk management has to be on point. You can't get away with it with a lousy risk management for a little while, but long term you're not going to survive. That's just the fact. Those are just the facts. You're going to do not so well if you can't handle risk long term. And all of this, you got to do this while you have a balanced self-aware mindset, um, self-aware in terms of your weaknesses, your blind spots, your all these biases we typically have as humans. You have to them in check. You're never going to have them perfectly corrected, but at least in check, and you correct them as you go forward. You got to have that while you are living real life. Real life has challenges, right? All of us. It's not necessarily, it can be relationship, everything outside of anything outside of trading can have an impact on your calmness, your awareness, your being able to detach, not being too emotional. All of these, that's quite difficult. It's a high performing skill, and like a high performing athlete. It's not something you just do on a dime, right? So I would say how to get funded, having all of those things in place. It's not just one thing. There's no shortcut. And to stay funded is continuously working on these three things that I mentioned, right? Your strategy, your risk, and your mindset. It's I can't make it any more attractive than reality. It means hard work, a lot of hours, a lot of sacrifices, and a lot of work on yourself. A lot of at a certain moment, it's about working on the strategy and your risk management, and that work continues. But as you progress and you have something profitable, the emphasis will be much more on you as a trader. What are the losses, not the losses, the faults, the things you do wrong, and how to correct them, how to spot them in advance so you avoid them altogether. And that's the hardest part, I think, in trading. Getting the strategy fine, profitable, optimized is difficult, but it's not the hardest part. Someone asking, how about using bad risk to reward 0.5? Love yourself. That's a very peculiar name, but there isn't a bad risk reward ratio, right? 0.5 may seem bad to some people, and it may not be good for certain types of strategies, but the risk reward on itself doesn't really say anything about the profitability of a system, right? It's the combination with the win rate, right? How often do you get win? If you have a risk to reward of 0.5, but you're winning 90% of the time, man, that's a very profitable system. I would definitely trade it. So it's not in itself just the ratio that makes it bad. It needs to be high win rate. You're saying yes. If the combination is profitable, then there's no issue at all. Of course, psychologically, the risk reward ratio and the win rate will have their own effects. You will feel differently as a trader if you're always winning, or if you're most of the time losing, right? It has an effect. Of course, it has a different effect on your psyche, and so there is an interaction there, but on itself, it's not necessarily bad. Given a high enough win rate, I would definitely trade it, and enough data, of course. All right, Reaper is asking what time frame does the masked trader takes I like the profile pic. We were just talking about Bruce Wayne. um my on my main strategy, I my entries are in the 1, 2, 3 and the 5 minutes. Okay. But that's on my main strategy, which is not very frequent. I may have a signal or two or even a few in a day, and sometimes not even one. So that's on the main strategy. And when I'm scalping, I use the minute to get my entries. But of course, not only the minutes, right? Top down analysis trumps all the way to the bank. All right. So Andre, on the topic of profitability in optimal risk reward ratio, has Andre has something to say. Probability of success is risk divided by risk plus reward. Okay, so 3 to 1 means 25% probability of success. I'm not sure what you mean by that, because in the equation, in this equation, there's no win rate, and you have to what you probably what you mean is that's the break even for profitability. If you look at online, it's very easy to find. You just Google profitability table in Google, like Google Pics, and you'll find where the line is, where on the specific risk reward ratio, what minimal win rate you need, right? If you look it up, you'll find it, and it's a good guide when you're building your system. And just a refresher to know, where's the break even win rate percentage that needs to be achieved in order for you to be profitable with any risk reward ratio stats. Love Yourself has a very thank you, Love Yourself, for being so active. We love that. We love that when you guys are interacting with us. It doesn't matter if it's necessarily all trading related, but we want to see that. And while you're doing so, hit the like button. Let's compete with last week's viewership. Let's see if we can overcome it. Maybe double it. Maybe I'm a bit too ambitious. Maybe not. Maybe you can you watching us can prove me wrong and say, no, that's not too ambitious. Yes, we can double our viewership for this week. All right, Love Yourself says, so it's okay, negative risk reward ratio with the 5ers? Yes, hell yes, the 5ers will not limit you. There are some exceptions, like high frequency trading, things like that. But I mean, normal trading, there's no limitation in how you trade. You just make sure you go through the rules, of course. But yes, negative risk reward is perfectly fine with the 5ers. I'm in the challenge stage right now. I just want to make sure that I'm following the rules. Yes, to make sure, depending on the program, you got to make sure you're very familiar. You know very well what the rules are, because they're slightly different between the programs: boot camp, high stakes, and hyper growth. But there's nothing too weird there, because what we want is give the traders the freedom they need. So negative risk reward ratio is just fine for them to express their strategies, their trading ideas. But as well, there are rules, because we need to protect our capital. When you get to the funded stage, you're actually trading real capital, right? It's a private fund, right, where you're connected to. So we need to be responsible with that capital, right? So there are certain rules you have to comply with, but negative risk reward ratio is just fine. You're welcome to be trading that with us. All right.
So what is your take on euro dollar?
Euro dollar, yes. Let's look at. Alice is asking. Let's see. Alice I like that, Alice. I like that. I feel we're in conversation mode, you and I, Alice, as the same as Reaper and Andre. That's what we want. We want to be in conversation with you, basically. Everyone says the firms are scams. I suppose you say that because you would like us to, give our opinions on that. I if there's a lot to be said. One is prop firms are not regulated, right? That's one thing you have to be aware, right? I don't want to, rain rain on your party, but they're not regulated, right? So you have to keep that in mind. Meaning, there's no regulator checking, auditing things like that. However, there are things you can do to make sure that your prop firm, the one you chose, is not a scam, that doesn't do, unfair practice, doesn't practice unfair, have unfair practices, or is actually going to pay you out when you have your profits. One of the things you can do is you go with a prop firm that is transparent, right? A prop firm that is that has passed the test of time. Blink blink, or wink wink, I should say. The 5ers, we are one of the first one. We are pioneers in this industry. Basically, the industry was formed by the 5ers to some degree, right? So this is not a 1 day shop that wasn't here a year ago, 2 years ago, or even 5 years ago. We have been in the business for a very long time, from the beginning of this industry. So that's one thing. Have choose a prop firm that has longevity in the market. And another thing is, you got to choose a prop firm that has their interest aligned with the trader. And at the 5ers, at us, we want you to succeed. That's why we have this YouTube. That's why I'm here. We want you to succeed. That's why we have workshops every weekday. We have a Discord community, very active, not just to, handle customers. They're actually to give back, to help the traders. And it's about that. It's about, because our interest as the 5ers is aligned with the interest of the traders. You win, we win, right? That's how it works. So those are the things you can do to make sure that you choose a proper prop firm, and you want to be with the best. And I don't know about you, Pedro, but when I want to choose the best. I don't want to choose, some have a choice that's like halfway through, or the 50th percentile. I want to be with the best ones. So if that's the case, here you are at the right place. Okay, let's see.
Yeah.
All right.
And interesting enough, the two firms that have been the longer in the industry are the ones that do the least discounts, which is interesting, right? Because attention as well to the discounts, to the prop firms that are offering 50%, almost 60% discounts constantly. That may mean that they are in need of cash, of liquidity, to actually potentially pay their traders, and maybe the business model may not be as sustainable as it looks like. That's the big issue that happened 1 year and a half ago. That all of a sudden a few companies disappeared, and those companies were making a lot of discounts, and everyone was attracted to it. And all of a sudden the big problem appeared. So it's interesting enough that the 5ers and FTMO, basically the two biggest ones, they rarely do discounts. Everyone is asking for discounts, but they rarely do discounts. We do provide giveaways, and we give back to the community, but it's because we are also community oriented. But that's reality. So that's maybe another factor. Look at the testimonials, right? Look at the trading conditions. There are a few things that you can pay attention to see when you're selecting which prop firm you want to be involved. Look at the ones that actually pay, always. Okay, so that's a few criteria to choose the prop firm.
For sure. We have a lot of questions in the chat. That's awesome to see. You guys are very inquisitive and curious about our take on things. Let's see if we take a few questions before we go to Eurodollar. I would love to spend the whole day answering questions. but I think we need to go to Eurodollar or to the charts soon enough. Let's see what we check here. So someone asking Umer asking, would you advise a bootcamp program to traders? Yes, I will. We know one of the things that one of the key skills traits that a trader needs to have is patience, right? If you think you're gonna rush things up, forget it. You're gonna be successful in trading. You gotta be patient to know when is the moment for you to trade, when is your setup coming up, when is the signal valid, when all of these things. It takes a lot of patience, right? Right amount of patience, not nothing in extreme, but you'd have to have a good dosage of patience. And the boot camp is the best program to develop patience because it's a 3-step program, right? Rushing it is not gonna. You can't rush that. It's the one with the most stages, but it's the best one in training your patience because there's no other way. You have to go three steps, and basically that's why Jonatan always says that the boot camp is, in his opinion, the best program for training. That's why it's called boot camp, right? Training the trader, making sure that trader, is not winging it, is not over, because you have to do it slowly. It's a long way, right? It's a 3-step program. And I think I would definitely advise bootcamp as well for any trader. Also because it has a very entry leveled fee, right? You only pay a small amount at the beginning, and when only after you reach the funded stage you pay the rest for activation, right? That's the best of both worlds, right? You get to trade without paying the complete fee altogether until you're actually successful at it. So I would say yes, definitely a boot camp. I would definitely recommend that. Also, no, let's not forget that you have to scale up. It's only 5%, right? That's a I don't see many people mentioning that, but that's a very good. If you have a good strategy, you can scale up, frequently, and that's a very good thing. Reaper, EA for position sizing and placing trade is legal, right? Yes, if you use an EA for your position sizing, you're not gonna get thrown into jail. You're correctly at stating that. I'm just kidding, of course. Yes, it's allowed. It is allowed to use EA for position sizing with us. It's no issue at all. Actually, I recommend Pedro as well. Pedro is a fervent user as well of the position sizing, and the one we're talking about is the PSC or position sizing calculator. Yes. PSC calculator. And nowadays, it wasn't an indicator before, but nowadays you can find it at earnforex.com, right? As you hear it, earn as earning money, forex, earnforex.com. And you download it for free. It's one of the best tools you can get your hands on because it's so easy. So I actually think, not think, let me correct myself. I know that if I trade without the position sizing EA, I would earn less than when I use it. Yes, I have tested many times just by using that tool, that the indicator. I use the indicator still, but it doesn't matter. It works the same. Just by using it, I keep more money. I get more money at the end of the day, at the end of the month. So it's a no-brainer. I always use it. And so, yes, it's legal. You won't get into trouble with any authority. Not on you, not in your country, but not in the 5ers as well. Okay, so we have Mike in the background. How are you doing, Mike? Take your time. We are getting see. Let's see. Okay, so I think we can move on to the. I have keep those
Charts.
questions. Yes, let's get to the charts. Let's get to the. I would say the best part. I'm not sure if it's the best part, but in anyway, it's the great part. The To me, it is the best. I'll be honest. The Keep those coming. Keep those questions coming, and I'll do my best to highlight them and keep them, save them for later, and perhaps we can revisit them. And if you're still online, we can talk about it. And if not, this is on YouTube, so you can rewatch it whenever you can, right after your lectures, if you're in uni, or after work, whatever stage of life you might be in. Okay, so let's look at my chart, if that's okay with you, Pedro. I'm gonna
Yeah, go
remove.
ahead.
I'm gonna put your yeah, there we go. Let me take off this. So what are we looking at? How has the market changed since last time we were online, right? Actually, that mine was Thursday. What has changed, right? New week. Have we? Do we have? Where are the opportunities? I would say something did change. We are well. Let's hit the chart and we'll talk through the charts. On the monthly time frame, there isn't a lot to talk about. I'm going to say very shortly. There is a monthly quasi left shoulder head neckline, and we're coming back into one of those order blocks that could be used as reversal structures. Doesn't mean it's going to reverse. It just means that if it reverses, we have the right price action, we could have a monthly signal. It's going to take a long time. I don't think it's going to happen this month, May, maybe June. But looking at the impulsive move, I wouldn't be surprised if it just shoots through and continues to the next station. Right? I'm not going to say much more because it's the monthly time frame. On the weekly, what do we see? The weekly is very, very strong. Price action, in terms of price action, look at this. What would you describe as? That's that's impulsive. Impulsive move, consolidation, impulsive move, consolidation. Will there be another impulse? Maybe. I mean, the market structure would allow that to happen, of course, right? But do we have, in terms of order blocks and quasi, any opportunities, right? No, we don't. The only thing we have is we broke the last high and we are sitting on top of it. As long as we are, it's indicated by TP, but because I had a TP there, but now it's not a TP anymore. We're above it. It's not that I'm going to short it into. Let me cut the text out so we don't confuse anyone. Okay, so as long as we're above this line, the weekly is bullish, meaning it doesn't matter if it takes 1 week, 2, 3, 5. I don't care. As long as we are above this line, the weekly bias is to the upside, because this is the line. Hi, Mike. As long as we are above this line, the market is telling us, not we're telling, the market is telling us that this breakout is for real, right? The breakout of that previous high. And that's the line in the sand. That's the test. I always talk about a test, and it's not the same test, of course, all the time. I'm not talking about taking exams of any kind. I'm talking about the test that the market needs to pass in order for it to be bullish or to lose its bullishness, become bearish. And this is the test, right? It is its ability to keep price above this line. Very simple. Let's not complicate things. So we are still above, and as such, we are bullish weekly. No order blocks to be trading, but it wouldn't surprise price would continue going higher. Once we break below that line, we should be starting considering that maybe we're going to have a much deeper retracement. Okay, that's the whole idea. Let's go to the daily. The daily is mixed. I was expecting, not expecting, but I mean, I was considering, because we have a fresh order block, that's the immediate retest, and we have the first retest with this swing into that order block, and we fail to have follow through. That would have been ideal in terms of price action. What we do have is a second retest, which is usually less potent for price to push out from, but still, you still have a good chance of price because it hasn't broken that order block. It has been validated, and as long as it works, it will be a call out for buyers to come to the market. So we are in a demand zone, basically. That's what it is, right? A demand zone. However, price action currently is not indicating, at least not on the daily time frame, it's not indicating that the buyers are coming in yet. Let's look at, if only we can get the right tool working. This is the price action I'm talking about. That's not bullish. That's not a reversal. That's not breaking any neckline. No break of structure. Meaning it's either not going to happen. We're going to go through that, that sand in the line on the weekly time frame I just mentioned, go to much lower prices, or the reversal is yet to come. Which of the two is? I don't know. I don't have a crystal ball. But that will, in the degree each one of those scenarios starts to build up, we can have an idea what's to come, right? It's never certain. It's not, nothing is 100%, but you can get, okay, if we get, let's say, an H4 quasi, and we start building perhaps another bullish order block on the daily, and we retest that successfully, now it's not, I can, with a high degree of certainty, say, it's above 50%. We're probably going to go higher here. And that's the whole thing of trading. It's identifying which side, right? Which side is more probable, which direction is more probable of happening, right? That's what bias is, right? That's your bias then. So that would change the bias to the upside. And we do have a demand area, and we are positioned, within the right side of that red. It's not red, but line in the sand. I was gonna say red line. In politics, they said red line. That's you cross the red line. This is a yellow line, right? We're on the right side of the yellow line. So we're still. It's the jury is not out there. But of course, it is, probably has to do with the FOMC meeting we have tomorrow, right? The market is still waiting to see what's going to happen, if we're going to have a weaker dollar or not. And that's going to decide in good part if we're going to change direction or not. Okay, so that's the daily. The daily time frame, we are in a demand zone. Personally, I don't consider this an order block that I would trade in my main strategy, but that's very selective. We are still in a demand zone, so it is okay to be expecting a bullish price action coming forward. Coming to the H4, right? Top-down analysis, going step by step. The market structure, as we saw on the daily, you can very clearly see it on the H4 as well, is lower lows and lower high. So, well, this is not a lower high because it hasn't broken this, but this is a lower high compared to that one. So we are in a very clearly bearish market structure. And let's see if we have a quasi, right? If we have a reversal on this time frame. We do. If you consider, well, that even can't be let me see. There is no quasi to be broken. Even if you consider that a neckline, that wouldn't be able to, it wasn't taken out. So that's one thing. This could be considered a possible head, but if we go back, the neckline would be all the way here. Have we broken it? No, we haven't. So there's the H4 is not telling us anything about a possible reversal. And on a more closer by, this is an inside quasi, right? So what I mean by inside is this is the range basically that we're in, right? This is let me maybe use a different color to indicate this. Maybe put, no, you can't see the 50-minute because we're on the higher time frame. Maybe I'll do a daily. Yeah, well, it's a little bit the same. Okay, so this is the range basically where we are in, right? And normally I would consider this to be looking for the head here. If that is the case, then that makes basically this the neckline, right? And this would be the left shoulder, right? You guys are following me along the way? Something about freezing? Am I freezing?
How cold is it over there, Victor?
Oh, I mean the screen. Is my screen freezing? It is. I'm melting.
Sorry, Victor. Sorry, I couldn't.
That was a
help
good
it.
one, Mike. That was really good.
I couldn't help it. Sorry, Victor. It had to be the first thing I said joining the stream. Was it had to be something humorous? I apologize.
Yeah,
No, we
that
love you
was
for
really
that.
good.
Oh, the screen is fine. It's not freezing. No snow falling, so it's okay. Okay.
It's just $0
this
that
is-
is freezing for the last week. It's not
Oh,
moving.
this is this is the range, right? We are currently in, right? That is the last swing high, and the last swing. Well, it is a swing low. That's the range we're in, right? And when I have that, automatically, when you have that, where you should, when you're looking for a reversal, you should take the extreme as to be the proposed head, right? So in head identification, in quasi, when you're looking for a quasi, this would be the head. That makes going backwards to look for the neckline. This would make then the neckline, depending on your rules, and otherwise it's going to be this point, and that automatically makes this the lowest point as the left shoulder. Okay, in that terms, we haven't broken anything yet, right? That's the biggest quasi, the most relevant quasi. However, if you you can, within that bigger picture, bigger structure, you can still have smaller reversal patterns that are less relevant, less potent, but they're still reversal pattern. The market is telling you something, even if it's not the biggest, most relevant structure. It is telling you something, and it is perfectly tradable. I trade them all the time, and this is such a the market is fractal, even sometimes even in one time frame, right? So this is the quasi that we should be looking for, right? That's the lower lows, lower highs, and we need to be taking this out, or that one, whichever the rules tell you. We haven't have that quasi yet. However, within this structure, and this is an inside quasi, right? So it is inside the range of a bigger quasi in the same time frame. It's this. You have a push down like so, right? So that's a lower high, lower lows as well, right? So this is a quasi much smaller inside the bigger range. And that could be the first sign we could see a reverse coming in. And let's see, and for that, the neckline is here. Okay, so you have two necklines. I mean, I would trade both of them, by the way. If the first one triggers, I would be in it, and if only the if the second one triggers, the first one would have triggered as well. But I would trade the first one as well, no problem at all. My strategy doesn't differentiate between an inside and outside, a quasi, or the whole quasi, basically, not an outside. So that's happening. We haven't broken that yet. So on both counts, there isn't any signs of a reversal on the H4 yet. Let's see. That's in terms of quasi. What else can we see? Yeah, there is a fresh order block here, and we are currently testing it. That's very nice. Maybe we can have a live. Maybe you can take a trade live for our audience. So this area, we presumably expect price to come back and have some buying pressure coming in, and possibly break some structure. Who knows? We'll see. If we go to lower time frames, there's nothing there. However, there is a quasi on the H2, and that quasi is not here. Let me see if it is here. Open, close. Yes, there is one, and that's this one. I see that. Okay, so we're already in it, but it didn't trigger. We did have a very nice response from it, right? That's a very nice response from that order block. But personally, that wouldn't have triggered me into the trade. It may have triggered you depending on your strategies, right? You're not necessarily trading the same way I am. Let me take this off because that's not relevant to me anymore. And in terms of we were looking for structures in this order block to not regarding the whole structure, just this inside quasi. And there was one order block, but it has been invalidated already. So there isn't anything, not on the H1, not on the H2, meaning to me that this order block on the H4 doesn't have alignment on any hourly time frame. And so, and as such, I just have to wait. And considering some structures here, maybe we can find, based on the quasi to the left, maybe we can find an overlap. Let's see if we have. We do have one here, which has been invalidated already. Let's see. That's this one. It's actually a whole area here. Okay, so this is the area. And of course, we're only going to be taking the overlap. So let's mark this. And let's use that daily marker or daily line. Let me mark this up like so. On the H4, oh, it's actually here. There. So this is the area that I'm interested in, that I would be willing and able to trade from, right? This area right here. So I'm going to be looking for price to come in here. That's the sweet spot for me. That's the area I want to be fishing at to catch my fish. I mean, my trade. So we haven't reached that, and until then, there's nothing for me to do. As easy as that. So I'm gonna put an alert to move that. Oops, that's not the correct one. There you go. There. Okay, so that's the area that I'm gonna be looking at and waiting. As I said, patience, very important. Just wait for the market to come to your areas, to your signals to be emitted by your strategy. And if not, there's nothing to do. You're not allowed to trade outside your trade plan. You're not allowed to trade outside your trade plan. Yes, I'm not the trade
Get
plan
told
police.
off by Victor otherwise. Victor's going to tell you off if you do.
I'm not the trade plan police, but I'm telling you, you're not allowed to trade outside your trade plan. So that's basically let's recap, because I spent quite some time talking about EU. So what do we have? If we look all the way from the higher time frame, the monthly and the weekly, we're still bullish. We're still up above that breakout line. Breakout is still valid, still strong. The daily, we are in a demand area. Let me show that visually. Right, the weekly, we are still bullish, right? So we could be looking for a long if we have lower time frame in alignment. The daily, we are in a demand zone. However, the price action is not telling us that the market is reversing yet. So we have to wait. The H4 is having a hard time, hasn't reversed yet, haven't broken the quasi, the big quasi, the most relevant one, and not even an inside quasi as well. So there isn't any signs yet of a reversal. You have to be patient. Let's wait for those structures to be broken. Then we can start looking for that long. That could happen today. That could happen tomorrow with the news of the Feds. But until then, you should either be trading with this within this range, meaning not trying to target anything higher or lower, because you simply don't know yet. We have a demand zone, so presumably it's going to hold, and we have a possible reversal coming up, but it hasn't really materialized yet. So you don't have a direction yet, right? The fact that we have a daily order block there doesn't mean it's going to go up. It just means that it could go up. Okay, so let's wait for the market to actually tell us. And until then, I would be trading between between this area, between this high and that high. Just be trading within that range, because you don't have any signs of what the market wants to do. So that's EU on my side. It's on a waiting stance, and it's not clear yet which direction it wants to go. It's eyeing strong, but it's not really doing. It's not acting strong, at least not yet. And we have Marina with us today. As always, Marina is one of our faithful viewers out there. Also listener in Discord. You gotta give credits to our regulars in our community. Marina is such a nice person. Not only because she's here with us, she's actually very, very nice. All right. Not legal to trade outside your trading plan. Correct, Henry. It's not legal. You may risk a fine, maybe even go to jail if you do. It's going to be
the law has been passed and ratified, and Victor shall act as judge, jury, and executioner for anyone who is caught doing anything otherwise.
Yes,
and he's the butler as well. So imagine.
Exactly.
All right, so that is. Let's see if we have any questions in the chat. Let's see. What else do we have? A head and shoulder. Someone is seeing a head and shoulder. Maybe you're looking in the mirror. I'm not sure. I don't see it. No, I'm just kidding. I see a head and shoulder as well.
Knees and toes.
No, it depends. The thing is, maybe I'm not making fun now, but I'm serious when I talk about the charts. You could see, of course, you could see a head and shoulder. It depends on what is your definition of the head and shoulder. You could see this as a left shoulder, that the neckline, and that the head, and that the break. So that's the quasi coming into the area. It's perfectly valid, but the thing is, you gotta know the time frame, right? Because to me, this is a quasi. After making a little bit of silly jokes, it is a quasi, and it is a valid one, but it's not on the, at least for my trade plan, it's not on the appropriate time frame, right? So we have that established downtrend. We break the neckline, right? That's the neckline. We break it, and we come back to retest the structures that is able and likely to push price. And what does it do? It does make that reaction. Simply, it didn't do it the way I wanted, which would signal me. So it didn't signal me, but it did do it, as you can see, right? So it is a head and shoulder. It is a quasi, which is also a form of head and shoulder. So you're absolutely right. Come we see. I was just playing around. Don't take it too seriously. But you're absolutely right. It is a head and shoulder. Here at the 5ers, we want to have we want to talk real trading, authentic trading, share with you our experience, our journey, everything we can, knowledge to help you, and we throw in a little bit of humor. At least we try to. I'm not very funny, I'll be honest with you, but sometimes I am a little bit. Sometimes.
Even if I say it myself. Yeah, we have Griff waiting to join us as well. So
I see that now. Thank you for letting me know. Yeah. Thank you for letting me know, Pedro, because because of my screen, when someone else comes in, hi Griff, I'm talking. You're there. How are you doing today?
Yeah, all good. How are you? Thanks for having me, guys.
Griff, you have to accept Victor's apologies. He's looking for violators of the breaking trade plan rule, whilst also being in full flow of order blocks and quasis. He's just overwhelmed with the quasis. So you just we like to give him a bit of breathing space when he's in full flow.
Yeah, don't violate Victor's trade plan or your own. You will be caught and you will be penalized.
You'll be punished. You'll be punished with quasis.
Yeah.
Whatever that may be. So, Griff, how are you doing today?
Yeah, I'm fine. I'm fine. The market we're getting some nice impulses on EJ and AJ, which I'm excited about because I've not
Okay.
seen price action like that in a while. So maybe I'll
Okay.
get a continuation this week, but we'll see. I know I've not had a trade in a whole month, so I'm eager.
Have you still not had a trade, Griff?
No, I've still not had a trade. Last week, I think it was last week, I set a pending order. Yeah, wait, was it last week? It might have even been the week before. So 2 weeks ago, I set a pending order, but otherwise, I've had nothing. I'm sorry.
And you're looking for the continuation, I suppose, right, Griff?
Yeah, that's right. So just a classic break and retest entry is how I trade continuations, and that's on AUD JPY and Euro JPY. Sorry, not GBP. I don't know if that's why you
Oh,
brought up this pair.
yes, but I thought you said the EG. But which one is it?
Sorry,
EJ?
AJ,
problem.
EJ.
Oh, okay, okay.
Sorry, Victor.
No problem. Oh, J, you said, not G.
Yeah, that's right.
The
JPY.
pairs, yeah, the pairs.
That's it. Yeah, on the 1 hour. Or don't show me the daily. I'll start looking for buys instead. The benefits of being 1 hour only.
All right, so let's look at that. That's very nice order flow right there. Yes, I like that. So where you're waiting for price to come back to get in? Let's see.
So if you
And
pop on the
in
1
here?
hour, I can show you what I'm looking for.
Yes.
Yeah, here. So I'm basically I'm just waiting for a strong candle to break under this doji that's just formed 3 hours ago.
Okay.
I'm waiting for a
Okay.
big candle down there, and then I'm looking for a retest of that level. So this is the issue with my entry, is that it's dependent on getting that confirmation candle, if you know what I mean. Like, we've got an
Mhm.
impulse here, but I'm not considering it as an established trend until we get a second candle kind of following through. So yeah,
Okay.
I'm basically, we've got the impulse, we've got the pullback. So now I'm just looking for a nice continuation candle to break that low, and then a retest of that doji, and maybe we'll trailing it down to that zone you just drew out, which maybe hopefully you think it's going there, because that would be great.
Well, that's the last. That's a fresh order block. That's where we had the impulsive move on the H4 time frame, and sometimes the market just continues without coming back. But if we come back to have some kind of a retracement, of course, that would be a great area if it aligns, at least in my trade plan, if it aligns with other structures on other time frames and other indicators, to take that at least to this area, and possibly even lower, because as you can see on the lower time frames, there isn't onto the left, I mean, there isn't any structure holding us back for a continuation, and we're accelerating, right? We had an impulsive move up, and you can see how this is beautiful. Look at this. Look at the size, and this is for everyone who wants to learn about reading price action. Look at the size of these. What do we see when we look at the size of the bodies? Can anyone? What's the word that comes to mind? Someone in the audience? It's a little test. You get a free get out of jail card if you answer this. Strength, exactly. Yes. Any other words? Any other words? White soldiers. I believe so. That's how it's called as well. But strong barrier structure. Yes. The word I'm looking for is acceleration. Right. You have bigger size bodies. Bigger. The number 2 is bigger than number 1. And number 3 is bigger than number 2, meaning there's acceleration. There's more, increasingly more conviction and agreement in the side of the direction of where the market is going. That's the order flow at play, right? That's visually looking at what the order flow is doing. So I like that, and that means that we having a expectation for lower price, it makes sense. But the thing is, you gotta get in at the right place, at least on my way of trading it. So that's on the bigger picture. I like that. like to look at other pairs as well. All right, so I think that's all for me for now.
Thanks for sharing your thoughts. That's interesting. It's great to hear a different perspective.
No problem. And because you're looking for that long into that area, of course, and I'm right.
Not quite, not the same area you've drawn on. I'd be looking for it's like the next candle to break below the candle that formed 3 hours ago. So the very recent low there. Yeah. So I'm looking for a candle to break under that, and then I'm looking for a retest of that level, exactly where your thing is now.
As a short, right? And then towards a rectangle at the bottom.
That's right. That's where I'd be targeting. Yeah. But it's conditional on a few more things forming. So yeah, if we get a big candle down, then I'd set a pending order, and then the pending order has to get triggered for me to.
So basically, this is what you want to see.
Nearly. It's a shame I can't annotate.
Exactly. Yeah.
So yeah, that needs to be. To be honest, that's quite similar to the flag pattern that I trade. So I'd be looking for something a little bit like that as well, to be honest.
Okay.
Yeah. Okay. I'm looking for shorts in this area.
Yeah, it's all about being how, because what you're trying to catch is those momentum moves, right? And and where it doesn't retrace that much, it just breaks, comes a little bit back, retraces a little bit, and then continues. And you get those with impulsive moves, of course, and that's what you need for your trade. So it's a little bit different. I think we fish in the same lake, but I fish on the other side, where I want price to come a little bit
I like that.
Have a bigger deeper end of the lake, where it retraces deeper before it continues. And that's but it's basically, when you have continuations, they didn't come in just one shape or one type. They have, with little retraces. When the more impulsive it is, the less the retraces will be, obviously. And the less impulsive it is, the more up and down, the bigger swings it has, the more is likely it is to have a deeper retrace. And I catch those, and you take the firmer ones. I take the latter ones. But it's basically the same idea, just different ways to catch the barracuda.
True that. Andre says something similar. One person's trout fishing and the other is lobster trapping.
I said barracuda, but barracudas are not in lakes. I don't think they are. They're in open seas, but that doesn't matter. You get the point.
Oh, Victor, what would we do without you?
All right, guys, I'm gonna leave you guys to it. Enjoy it. I'd love to stay, but I can't. I will come back in about 50 minutes, and if I'm not mistaken, or whenever the schedule says I'm gonna be back. So have fun, and I'll be back soon. Bye bye.
Awesome.
We're not going to tell you when Victor's going to be back, guys. We're going to leave you guessing. All right. So it'll be much like a quasi. It will appear out of nowhere. Cheers, Victor. All right, guys. Let's have a little bit of a reset. Pedro, are you sticking around with us, or are you heading off as well?
Maybe I can send just around 10 minutes more before we go.
Cool beans.
Yeah.
All right. Well, let's.
If you look at that chart, okay, forget about it. That was his chart. That's Victor, right? We're looking at Victor's chart. Yeah. Okay.
Yeah. There we go. There's yours. Yours. All right. Guys, we'll do a quick
just
reset.
Understand. Yeah, to just understand. Like, I think what you wanted to do is something like this, right? Just
exactly.
Yeah.
Thanks, Pedro.
Which basically, would that consider as well, like what happened in here as well? So basically, after the break of this level, something here as a continuation.
You're right. It's super clean on the left there. You're right. That's a perfect example. You can see the continuation patterns that I'm kind of looking for forming really nicely there on the left, just touching the previous high and continuing. Yeah, that's a great example.
Yeah, that's kind of what I thought. Yeah, okay.
Cool.
Yeah, that's it. Because and it's maybe one of the reasons maybe why you are maybe not executing some trends is because sometimes price breaks and just goes. There's no retest, so you just miss the trade. So maybe the question to be why not to price a breakout sell stop in here, to just try to catch and go straight away instead of then waiting still for the trace. Would that something that you would consider?
Yeah, that's very true. It is something I've thought about. The reason that I look for that second candle as a confirmation and then before setting a pending order is because it's just that it acts as a confirmation. Whereas I feel like if I set a sell stop, if we break the low with weakness, then
it reverses.
it could just start descending or start
Yeah.
moving correctively. So
Yeah.
that's something I haven't explored it properly, but I think it would definitely get me in a lot more trades. But then I'd be in a lot more trades where I'm not seeing a continuation of that momentum because it's kind of just, it might
just a
break
fake
into
out.
low and
Like, it's
retrace.
just something like this and it goes.
Yeah, that happens sometimes. But I
Yeah.
guess you could do that if there's like loads of momentum in the first leg. But that's why I wait for a second leg of momentum as proof.
Yeah, got it. And the second question to be, because you're looking for the momentum, right? So would it invalidate if you did actually have a deeper retracement towards this level, or you still would accept this level then to continue?
Thanks. That's a good question as well. So yeah, what Victor was describing, where you have that kind of deeper pullback, I would only tolerate something like that if it kind of trickles up to the entry slowly. If it goes up too quickly, then I'm seeing a shift in momentum back in the other direction, and now I would be I'm seeing volatility, or I'd be looking for buys. So yeah, the only way I take a deep retracement like that is if it goes up over lots and lots, exactly like that.
And then
that's the only way I take
momentum,
like
and then
exactly. That's my bread and butter. That's exactly what I love, those kind of setups.
Okay, perfect. That was just questions. Maybe you finally can show your chart, and now maybe it's fun instead of us trying to visualize your entry. It would have been easier in the beginning.
No, that's great. That's exactly how I trade. Perfect.
Yeah, just show your chart. What are you working?
Let's do a quick reset. We'll give Griff a chance to share his chart, and we'll just be back in a second. All right, guys.
Sounds good.
Cool beans. That's right. It is time for the AlphaBeta Lab takeover of the 5ers stream. And Griff is going to show us the true patience of a master, of how he's able to trade but not trade, how he's able to make money by sitting on his hands.
Quantum trading, right?
Quantum trading at its finest.
Trading and not trading.
So hopefully we can see your screen now, Griff. My apologies, guys. There seems to be a lot of banging and knocking around in the office where I am right now, so I apologize if you're getting any of that coming through on the microphone, but I'll do my best to mute so you don't get disrupted. But let me know if you do hear anything.
I've not heard any banging yet. You're good. So yeah, exactly as Pedro described, I'd just be looking in shorts here. What I'd be looking for is basically just in fact, what I can do, I can do one better here. I've got this tool so that I can make fake candles. There you go. Look at that. So I'd be looking for exactly this. Yeah.
Where did you find fake candles?
I can make them any size I want. Look at that.
Oh, you're just doing the squares. Okay.
Yeah, I am.
I thought you had a template or something that was going to blow me away, or some kind of quick, cool kind of something that gets inserted.
Yeah, so I'd be looking for this basically. A big push down and then a retrace to my entry right here. Oh, my mouse has just died. There we go, it's back. 12 pip stop loss, I think. And yeah, basically this is what I'd be looking for as a classic continuation entry, just a retest here. And if you look over to the left, you'll actually see this price action quite clearly, I think. Literally testing each of these highs. You can see I've got an indicator which marks them off, but I didn't actually take any trades here. And I think over the years, my criteria has become quite strict. So even though there's some pretty clean continuations in hindsight, I didn't take any trades here. The first continuation, which is this one, you can see push up, pull back, continuation, and a retest. I didn't take this one because the first leg, not impulsive enough, prior price action, it's kind of range bound, it's not super clear, and then we also had quite an aggressive retrace to the entry, which I guess is what we were describing, if I go along, what we were describing over here, in the same way that I wouldn't take a retrace to this entry like that Victor drew out, because this would start to show me a shift in momentum, and I wouldn't be as convinced that price is going to continue after a big bullish candle like that. So I didn't take this entry literally just based off of this bearish candle here. The JPY pairs are quite volatile though, so I do have a higher tolerance, but this was just way too much for me. It would have been too strong of an impulse. And if I recall, I think the stop loss might be tiny. Yeah, I generally use a 10 pip on these pairs, and you can see that that is a little bit too small. The next continuation, I wouldn't take a continuation above a big bearish candle like that, because all the sellers within this move down are going to have their stops here, and I'm expecting a pullback as we break into this zone. So even though we have a nice push up, we have the pullback, and we have another push up, this pullback is too strong, and I would not want to be looking for buys in this area, because I would be expecting either a range or a reversal. But in this case, we continued again. So we've got a nice pullback now, we've got an impulse, we've got another impulse. Why didn't I take a trade here? Well, because we were coming into spread hours. So there's a reason to stop me at every step. So this is the spread hours candle, this is the spread hours candle, and at this point, thankfully, spread hours has kept me out, and now I have more context. I've got 2 free candles of information by staying out there, and again, I'm seeing a shift. This is starting to show me a bit too much bearish pressure. To be fair, there's a flag here which I could have taken.
Sorry to stop
No,
you,
go
Griff.
for it.
There was just something that you said that I thought was really interesting, where you said you get
Sure.
2 free candles of information.
Yes.
And I really like that. I really like the way you just put that. Is, you know, essentially you're getting more information from the market for free because you're not giving anything to the market to try and figure it out, which I thought was just really just like the way you said that. As sometimes doing nothing, you're still getting information, you're still getting insight, you're still, you know, exploring possibilities within the market. And I thought that was a really really good soundbite. So I just wanted to call that one
thanks.
out.
Yeah, it's funny. There's a lot of people that they miss a trade. Then this will apply to everyone. Let's say you have a setup that, let's say a flag. So maybe you miss the original flag entry right here, and price moves around a little bit more. There's 2 different approaches you can take, maybe 3 different approaches. The first approach is, well, I missed it, I'm not going to take a trade. But another approach I see a lot of people taking is what they'll do is maybe they'll set a pending order at the level that they would have entered. And then the logic is kind of like, oh, well, this trade fits my plan. I would have been in this trade. So regardless of what happens, I'm going to just enter it where I would have. But I disagree with that. And I take the third approach, which is I've got all this additional information that I can use to make my decision that I didn't have had I entered over here. And I will use this additional bit of information here. Oh. And yeah, that's essentially what I did with these candles here, because between 9 p.m. and 11 p.m. in the UK is when spread hours occur. So that's, I think, 4 p.m. to 6 p.m. New York time, when the spreads widen, rollover hours. So I don't trade those 2 hours of every day. And these 2 hours I waited to avoid the large spreads just so happened to be a period where we had these more bearish candles, which I wouldn't have had had I entered during that time. Yeah.
Cool, thank you. Just talking. missed it. There we go. Maria's just asking if you could. I think I know what you mean by the spread hours in terms of the rollover overnight. Is that right? What you mean by the spread hours?
Yeah, so that's when I think the reasoning is I don't quite understand why they increase the spreads, but basically at 5 p.m. New York time every day until 6 p.m. the spreads on all pairs get significantly larger, and that's normally a time where people are just stop trading completely or are a lot more cautious of taking trades. Personally, the way that I approach it is I don't trade for 1 hour before as well, just to be on the extra safe side, because I really don't want to be holding a trade during spread hours or rollover hours. I don't know. Do you guys have much experience? I mean, if you're trading sessions or the lower time frames, I bet you don't really encounter spread hours very often because it's kind of out of session.
Yeah, I think the spread is pretty much it's the rollover of, you know, kind of where we're going from officially starting a new day, right? So New York is shutting down and Australia's opening up. All right, so it's that rollover of one day to the next, and that's when you get all the swaps and everything else being charged over time. So that's why also why there's that kind of wider spreads happening. So yeah,
it's worse. Yeah, and it gets worse if you're not in the major currency pairs like dollar or any pair related to dollar. That's still controllable. Like it's controlled in terms of, okay, maybe euro dollar gets wider like 2 or 3 pips, but if you start looking at the minor pairs, that can be quite a lot. And the problem is that sometimes when traders, they get upset because when you're actually looking at the chart, all of a sudden you see your stop loss being triggered, and what you see on the chart price didn't even reach there, because what you see on the chart is only the bid price and not the ask price, and that's kind of like the bid and the ask, it just get so wide. Then all of a sudden, why is my stop loss being triggered in there? Like price never got there, but it got. Like if you actually look at the chart in that specific time, and if you actually include the ask price on the chart, then you're going to see how wide that it gets. And but it gets worse. Like New Zealand pairs is terrible. At least from my experience, it depends also on the server that you are using. Not every server is going to be the same. But yeah, the minor pair, like the less liquidity assets or pairs, it's going to get worse.
Yeah, and exactly that, Maria. It's the rollover from, because it's essentially the start of a new day properly, right? Is that, you know, the new day has started trading, and so it rolls over from the US over to Australia again. So yeah, there is just something I want to pick up from Amith here, because he's picked out something that, you know, Victor using the fibs, and, you know, hold on to this chart and trace a Fibonacci tool, and it will tell you where is the bottom that you can expect. And you're absolutely right, Amith. You know, fibs have absolutely a valid place in terms of trading, you know, methods, entries, exits, you name it. Not everyone has to use them, just like not everyone has to use a Gantt, or everyone has to use any other of these measuring tools or any of these other indicators that are out there. You know, LJ, who normally comes with me on the AlphaBeta lab, talks about the standard deviation mark out that he uses. Not everyone uses that. So I hear what you're saying, but what I would say is there isn't necessarily a requirement to have to use fibs or not use fibs, because each to their own. And I think one thing I would really say, I've gotten to know Griff over the last month or so doing these streams with him. There is nobody that I have seen with more patience than Griff. I have not seen anyone with the level of patience and the level of discipline that Griff has. Here he is. I was talking about him and he jumps in. This is how it works. Telepathy already on the ABL team.
That's it.
I was just talking about you. Your ears must have been burning, mate.
Well, you know, I actually missed that. Pure chance, mate. Yeah.
Oh, so I'm telling you, it's telepathy. No, I was just saying how we had a comment about, you know, why doesn't Griff have any fibs on his chart? And I said, well, not everyone uses fibs, and, you know, some people do, some people don't. You use, for example, the standard deviations. Not everyone uses those. You know, it's each to their own, right? So yeah, but there's a comment from earlier. So Griff, I apologize, but I feel as though seeing as I've somewhat stopped your flow, I'll just quickly get in on this one. Sure. This kind of goes off the back of I don't know if what this is off the back of, but there was somebody yesterday. We were doing some live stream yesterday, and there was a couple of gold trades, that I had taken, that I looked at, and they didn't work out. I got taken out on them, and we had a couple of people in the chat then turn around and say that they'd blown their accounts because they had taken the trades that I took. And I'm not sure if I understand what Claudio's saying here, because you made 1% on your account and it's my fault, and I'm not quite sure. I don't understand. Did you make it or did you lose it? Because if you made it, you're welcome. If you lost it, then it's your fault. So
they might be crying because you lost them the 1%, and that's the wrong emoji, you know.
Yeah, I don't know. I'm not entirely sure if I understand that, but it just, you know, to remind everyone, this is not a signal service. This is it's you won. Okay, all right. So you risked 0.5% and you got 1%. Well, there you go. So you're welcome, Claudia. But this, you know, this stream, ABL streams, these aren't signals, guys. These aren't, you know, this is purely educational, entertainment purposes. And if you're looking for trade ideas, that's fine. But you've got to trade your own plan. You've got to trade your own ideas and your own entries and everything else. Otherwise, you may as well go join one of those dodgy Telegram channels that I used to use at the very beginning of my trading journey, and just watch how you lose money left, right, and center there. Yeah, exactly. So
don't take signals, because you got to remember, everyone here trading is a probabilistic game. So just because you're looking at something, it could very well be that someone's wrong. That could be the 30% that they're wrong, or the 50%, depending on how they structure the trade, because there's a whole management side as well. So if you guys try and copy something here and you've managed it wrong as well, you know, you could have completely different metrics to someone else here talking about their trade. So you'll get upside down very quick. So take the insight, take the learning, take, you know, whatever, and then construct your own ideas. Don't just take it as you know, no one here has a crystal ball, right?
Yeah, exactly.
Nor does Warren Buffett, nor does anyone. So do your own stuff. If it's helpful, then take it. But yeah, don't just be brash with taking trades just because they were mentioned here. Okay,
100%, because nobody knows where your entry or where your exit is. Nobody knows your risk management. Nobody knows your alarm bells to say, hang on a second, this is going against me. You know, only you as a trader know that. So absolutely.
You could also have 3 or 4 other trades that are completely uncorrelated. So it's just a part of the entire set, right? Like,
100%.
You know, some people just be trading one core asset. Some people have 3 or 4. Some people have something in indices, something in FX, something in commodities. So taking one single trade, and if you're running 1%, 2% high risk on that, and chances are you could get blown out. But for the person placing the trade, it might be very small in comparison to what else they've got running. So
exactly,
just be careful.
Exactly that. And one other thing, Abdullah saying something about Alex tweeting that he left the 5ers. Alex did leave the 5ers, and he left in, you know, on great terms. And, you know, we all miss him, but we also wish him well. And, you know, you never know. You know, maybe he'll come back as a guest speaker on the stream. Who knows? But we very much, miss him and wish him all the best. But, you know, there's nothing wrong with somebody going off and taking a new opportunity to go and do something new for themselves. That's allowed, right? So you know, it's worth pointing that out as well. And Claudia says, I'm just kidding, I have my own setup on my own rules, but I'm from the Son Goku generation. I learn from everyone. Fair enough, Claudia, fair enough. I just wanted to mention it because yesterday I literally had 2 people in the chat saying, I blew my account because I followed your trade. And thought, I didn't tell you to take the trade, you know. I didn't. You know, so, and if you're blowing your account because you followed somebody else's trade, then you're risking too much. So yeah. But anyway,
guys, I'm leaving it now. I'm leaving.
No worries, Pedro.
Yeah. Enjoy. Have a good day.
No worries, man.
And thank you very much, everyone. Bye, bye, guys.
Take care, man.
Thanks, Pedro.
Oh man.
Griff, is that a potential trade that I see?
Yeah, it really is. I might be, if this closes below my blue line there with a decent close, I might actually have a pending order live on stream.
Live on stream. Oh my god.
Hang on a second.
Guys,
Hang on a second.
Guys,
No, sorry.
This is once in a quarter.
No. This is. Sorry, we need to go back, rewind, go back on the YouTube, and just listen to what Griff said. He said a pending order, so he's not entering the order.
Possible.
It's a pending order, right? So let's not get overly excited, right? We still need it to then bounce back to us. Honestly, and try again.
Pending orders are pretty exciting for me. But you know, even here's the thing, right? Even if it closes like just here, like that's not huge movement for me to be tagged in. So
yeah,
if it has a relatively small break, like around there, I'm open to setting my order. And there's a pretty good chance I'll be tagged in. But yeah, it does require like another, what's that? Like another 10 pips down. We'll see. We'll see. No expectations, not setting expectations here.
And it's not a signal. There's no signals here, guys. Just make everyone, make it absolutely clear to everyone. No signals here whatsoever. I am actually still in a trade. I'm going to wait and see. I might move my take profit, but I am in this trade here on
good.
EU. So this one basically saw the setup on here. So you had one wick rejection here, took this liquidity, bounced up, came back, retested that wick, came down, retested it again, and shot up again. And then as I saw this get set up here, I then took the order when we saw that bullish momentum. So got in around about just at the bottom of this one. So as we came down, got in there. Currently sitting on that one for the time being. We'll see how it plays out. Currently a 4R on that one. But actually, because it's part of this wider move where we've got this break of this structure and then creating this new higher high, I could actually see us coming and taking the potentially even the highs from Friday, but we'll see. So potentially could see us going up to the 138 level, but I want to see how it plays out on the lower time frames on the 1 minute. But for sure, I'm looking at this nice area here because that is a 5 minute double top, perfect double top, which for me is major liquidity. So on an intraday trade, something like that is a really good level. When it opens and closes on the same one and it's an equal high or equal low, they're okay. But these ones where it's for example, 2 1 minutes there, those are really, really strong levels of major liquidity to be targeted. So yeah. Sorry, Griff. So you're in Aussie JPY. Sorry, you're going to say LG?
No, sorry. I was just going to mention the pound. Like it is ripping. Right?
Is it?
Yeah.
Yeah. Oh yeah. Yeah. Check that thing. Especially even go down to a
as well.
1 minute or 5 minute. Like it's been non-stop traffic, just up.
God, yeah.
Yeah.
I was so busy looking at EU, I didn't even notice
One way. Yeah, exactly. I think we were mentioning in the group chat before. Pound definitely seems to have the better structure at the minute. Euro is definitely a little bit dubious, and it's ran. So
is that maybe a front runner though for EU?
Yeah, exactly. That's
it used to
the
be.
next thing I was about to say. Yeah, exactly. So if pound comes off, often then EU will start to dump. To be honest, that's what I'm hoping. That's what I'm looking for. So we'll see. But I'm also short Aussie dollar at the minute, just because it seems to not be liking it up here. So I don't know if we're getting a similar situation where any of these highs are just can't really digest it, can't really maintain this kind of area. We've gone back and forth, created a slightly new low, where we stopped before at the sort of roughly 37 is roughly the pivot level today for the first support. We have bounced off, but it's not convincing, which is again against what I would have thought we'd see earlier. So
Interesting.
So I want pound to come off because it often helps that to run down. So interesting point. We gotta phone up Alex, give a call to Madagascar and get him to short.
Get him to short GU. Claudia's made a good point though, actually, because the UK was closed yesterday for bank holiday. Whether there's maybe some kind of readjustment for positions, because obviously we had the US and we did have some markets open yesterday. It could be that London investors are readjusting based on what happened yesterday. I mean, there wasn't a huge amount that happened yesterday. Obviously, gold was the main one that really moved. Everything else really kind of just sat around where it was, really, didn't it?
Yeah, it did. I think just on the face of it, yeah, like we're saying, the pound seemed to have the better overall structure. It's a consistent market theme at the moment. US dollar selling off, dollar yen tanking. And I just think pound had sort of better levels. So we punched those levels and it's just sort of ran on. I don't think there's anything too heavy to read into it, but
we have got the CAD balance of trade news coming out in 49 minutes. So obviously it's not US, it's not the US trade balance, but it will still have some kind of a ripple on things. So it could just be that we continue to trickle, and then we'll maybe see a reaction after that. So that's, I think, probably my TP. I'm probably going to leave as it is, and I'll take the 1% profit that I'll get once we hit that level. So
that's fair. How have you been though, Griff? Have you taken any trades since last we actually spoke, or are you still still waiting? No.
Yeah, I've not taken any.
No. Have you got your eyes on anything? Because you might have talked about this already, but obviously.
No, of course. I am looking on AJ and EJ for shorts. AJ, we've already got this nice pullback, so I'm basically just looking for this. So I'm looking for a break like this. And then on EJ, we've just got an impulse. So I'm basically just waiting for a confirmation of that momentum by getting a small pullback, strong break, retest, and then a continuation ideally. And now you've pointed out GU. I mean, on GU, I want a huge impulse normally because it can be quite corrective. Like if we get another big candle up, then I'll definitely be looking for a continuation or a flag on that pair as well. But yeah, otherwise, there's not been a lot going on. I mean, I was just talking about all the continuations I could have taken last week, and they actually all played out pretty well. But yeah, there's a lot of things that kept me out. So like this one, it needed a big pullback to the entry. I didn't take this continuation here because we're going above the liquidity area based on this big pullback. Yeah, I nearly took a bunch of trades, but at the moment AJ and EJ are looking quite promising. I've not had anything look that good for a while.
Yeah, that's interesting because we have in the ABL streams been talking about the yen pairs for a little bit. I've been commenting how I believe the yen should strengthen. And eventually, we're getting some of these lifts, obviously, because there's a lot of the carry trades still in there. By my opinion, is eventually that should break down. And it does seem to be, we are structurally, gradually unwinding that to some degree. So that definitely plays into that. We're also talking about the relative difference between that and the franc as well. So that's interesting because that definitely lines into many of the things I've been looking at as well. So there you go. Yeah.
Oh, that's great. Thanks. That's cool to know.
Yeah. But yeah, like you're saying on the pound, yeah, you do want an impulsive push up because I always liken the pound to somewhat similar to in between the euro and gold. It's kind of in between. It tends to wick up, wick down a little bit like gold, right? So
yeah, I get you.
Quite interesting. Yeah.
I often see it moving like this. It ranges and then you get a break up, but then it just continues ranging. Like on the 1 hour, it moves like that a lot, forming huge channels. But yeah, like impulse, and then we just get a big retrace and then it ranges. So yeah, when I'm looking for a continuation type model, with the continuation, a break and retest or a flag, I do need like a mega impulse on this pair. Yeah,
then the channels definitely they're always much larger range as well and then eventually when it does break, it just runs. The same
Oh,
thing,
it really
like,
flies.
falling as well, just collapses.
I've had mega trades on GU. I can probably find one. I remember I had a trade which literally went to like 40% profit on this pair.
Really,
that's on the
really,
1 hour,
on
yeah.
one trade, far out.
Yeah, is it this one? No, this one did pretty well as well though. You can see I wasn't able to lock in everything. This one went to about 20%, but I could only lock it in there. I think this was the trade that got me my first funded account.
Oh yeah, awesome.
I'll see if I can find that 40%er because it'd be cool to see.
yeah. No, go for it. Definitely.
Look through the journal.
I'll just see what have we got in the chat. What's going on? If you guys have any suggestions or stuff you want us to look at or whatnot, then just go for it. So.
I think this is it. All right, September 23rd of 2022. Let's see. Yeah, this was a really crazy trade because I remember thinking it was such a big trade. I was just thinking, do I follow my plan or do I close this out early? And I've never thought that before.
The Ukraine stuff like took another elevation. As far as I remember, back 2022, because that started February, and then I think
the other one was Feb.
Bust a bit later, and that sort of thing. So yeah.
But yeah, there was like this flash crash, and I remember waking up on Monday because I was checking the charts. I wanted to see how the trade was doing, and I woke up and the charts were here, and I was thinking,
oh no, that would have been what
this
was
one's
the name?
Different, yeah.
No, because it's pound. So what was the name? There was the
I don't trade news.
What's the name? No, wasn't it? Yeah, but she was the prime minister or whatever, and she lasted like people were saying like a head of lettuce lasted long.
Yeah.
What was her name?
Liz Truss.
Mike would know if it was still around, but
I think it's Liz Truss, maybe.
Yeah, Liz Truss. That's it. That's what it was.
I see. I didn't even know that.
Yeah, well, there you go.
And I was shorting her.
Yeah, I mean that's good. That's a perfect case of strategy being prime. Like you've definitely got something good there. So
this trade literally ran to 42%, and I remember I woke up and it was 3 a.m. and I saw this candle, and based on my understanding of price action, I knew that we were going to retrace. And I remember thinking, do I close this trade early or do I follow my rules? And I decided ultimately at 3 a.m. by the way, I decided that like if it kept going, I would be so mad if I closed it here, so I decided to hold it, and unfortunately it came back for 10%. But you can't be mad at 10% profit. That's still great. No, that is still good. That is good. Yeah, it's rare when you get those kind of moves. That's so aggressive that, I would say typically that's one of those, I guess call it like a gray swan per se. I get you.
Normal, and normally, often whenever I see them within my own reasoning and that kind of thing, I'm like, okay, no, this is the time to just take it and and sort of wait and see what happens. So, because normally that is like a abnormality, that type of thing. So
yeah, definitely.
But no, that's huge, man. That's huge that you caught that, bro. That's huge. Absolutely huge.
But again, years ago now, I haven't had anything like that for a while. I mean, I still get the occasional 10% trade every year, but that's the biggest the biggest a trade I've had has ever ran. But on GU, you need these huge impulses. But then, interestingly, I found, at least with the break and retest model I have, the continuation candle, so the candle that breaks lower on GU, I've got such a tiny tolerance for the break. I'll basically take anything with like a near solid close, because quite often you will literally just get the next candle will just do something like that and it'll tag you in just barely. But that's a perfect trade.
Yeah, for sure. Because you mainly trade like currencies, right? You don't really
Just
dabble
currencies.
Yeah. Okay. Yeah.
Yeah.
Yeah. Fair. So I'd be curious as far as some of your trade setups and structures with the current run that like gold has had. At some point, there should be a rather large swing trade, right, to pull when you see that. So I would say that's something to keep an eye on. To be fair, because you can't just get like a one-way movement the whole time, and you might actually have an opportunity for like a quite sizable trade there. So
with the way it's trending at the moment,
at least
too.
something to keep in the background. Right?
Yeah,
so,
thank you.
Yeah,
I have looked at gold a little bit, but obviously this is like maybe last year, and when I looked last year, you can imagine it's kind of price action just like this, where it's just like there's no real direction. It's just like these volatile V's everywhere. But obviously in the past few months, it's just been having these really nice trends. Like I'm sure there's plenty of nice continuations in here that I could have taken. Like here, actually, there's a continuation right there. That fits my plan, and I would have trailed it low. It would have been trailed to under that inside bar. So there's a 6% trade, and that's I don't know what stop loss to use on this pair, but yeah, maybe I should look into gold a little bit, especially like if you if it has the potential to have a big swing trade in the future.
Yeah, that's why I was just mentioning that, because when I started trading 12 odd years ago, similar deal. This is coming out of the post GFC, and then we had the European and debt crisis, all that kind of thing. And then yes, once you get gold sort of peaking at some point, it does tend to just run down, and you get these perfect structures. So just from the little bit that I've seen to try and gauge how you enter and exit trades, etc. It seems that gold does, on certain occasions through certain periods, offer a perfect structure for that. So we've definitely been kind of in that more suitable range for that lately. So definitely probably through 2014 to 2019, it would have been rubbish for you. But and probably even through after COVID through to 2022, end of 22, I would say. Because we did have a lot of that V type structure that you're talking about before. But now where we are, at some point, it's fair that there should be some kind of structure for that. So
that's great to know. Thank you.
Just give me.
I will definitely do that.
Give me 5% later when you pick up.
Yeah, thank you, man. I appreciate
trade.
I appreciate the tip. Yeah, I think to be honest, last time I looked at gold would have probably been towards the end of 2022, and that's when I just like wiped it off because I'd obviously go back a few years, and I was just like, this price action isn't for me. But if it's been funnily enough, 23, 24 were slower than my previous trading years. 21 and 22 were really good for me, but then 23, 24 were a bit slower. I could have easily supplemented gold if it was trending a little bit. That's good to know. Yeah,
because at the end of 22 is basically when it sort of really started to gradually, incrementally just keep running up like that. It was sort of post the Ukraine situation, and the them asyluming the assets of Russia, right? So that really took off gold, because every other country realized that if they can do that, then they can do it to us. So they started picking up. There was a lot more government buying from gold, because most of it's from that, not from actual institutional players. We spoke about this earlier, so I won't go into a big thing on ABL earlier. So but yeah, that's sort of what has picked it up. But at the same time, it can't, eventually you're going to get a bit top heavy. And when that happens, gold tends to really crater, especially now that we are getting closer to a Ukraine-Russia deal. Obviously, I know you don't look at macro stuff at all. But say if they do unlock those assets, that's potentially something that would honestly crater it.
I can imagine.
$500. And if you position yourself well with your structures set up, it should be clear as it's happening, right? And you might be able to pick that up and honestly have an absolute windfall. And when you do, I want you to come on,
Commission.
show us the analysis, show us that whole thing, and show us how much of an absolute sweep that you took, mate. So, anyway.
I'll keep an eye on it. Thank you. No, that's a really good tip, and I appreciate you having taken notice of, and Mike as well. I appreciate giving me the floor to kind of talk about the setups a little bit, and you guys actually thinking about where it could be improved, where I can use it. I really appreciate it. Very helpful.
Absolutely, man.
It's what we're here for. It's actually brings me to the point that I wanted to respond to with Alice saying they'd like to have signals and can we recommend some. Alice, take it from somebody who has the scars and the minus figures in his bank account and in his savings account to tell you, do not try and chase signals. If you try and chase signals, you're just on a road to ruin. The signals guys are out there for Telegram and everything else. They aren't interested. They're just throwing out ideas, right? And by the time they've sent it to you, the trader's already gone. You're then putting yourself into a position of minus risk to reward and all sorts of different random stuff. So please don't go chasing signals. If you want to trade, go and learn it, go and study it. Come to us at the AlphaBeta Lab and learn it that way. There's loads of great content there. Keep coming to these streams on the 5ers as well, and you'll learn a lot more, and then you can do it for yourself, and then you don't need the signals. You really don't need the signals. And there are strategies out there. Griff is taking trades less than once a month, right? And he's still in profit, he's still making money. I'm taking intraday trades. LJ's taking all kinds of trades, both swing and intraday and everything. You need to find what works for you, and you need to tailor your strategy towards that. Don't go chasing signals, please. I beg of you. You will just end up losing money. Okay, you might get a couple of nice wins, but in the end, you will just lose money. So please don't do it. Please don't do it.
Yeah, on the thing of signals, guys, the thing you honestly have to ask yourselves is, why are these people providing signals? Because generally, if you've got a certain edge, you've got something that really works, you don't necessarily want to just voice that to the entire market. It's the same reason that banks, hedge funds, institutions, pension funds, whatever, they keep all that stuff secret. Even for the major players that have to report certain things because they are over a certain value, right, of like dollar denomination, they have like a 1 month lag for that specific reason. So no one can front run them. So if you got someone pumping signals every single minute, whenever they get them, what's the thing there, right? You got to be a bit dubious, a bit questionable, because chances are, if they're actually got that for themselves and it's actually profitable, they'd be able to compound that up and up and up and up, and they don't need to be doing all this extra work trying to set up signals for other people. It wouldn't make any sense, right? Yeah. So chances are, you gotta call bluff on it and say, hey, why is this happening? All right. So the best thing, again, it's one of those things. Do you want to fish, or do you want to be taught how to fish and you catch all the fish, right? So definitely go out there, learn how to trade yourself, learn how to figure everything out. It is a bit more work, but unfortunately there's no free lunch, right? So do that. You'll be confident in yourself, and there you go. Signals, waste of time. Yeah. Chances are you're getting played in some degree. Don't buy into that. All right. So yeah.
Like, absolutely. Somebody who's actually consistently profitable is probably not going to be on Telegram giving it away for pennies. You know what I mean? A couple £1 a month or whatever they would charge. It's just not realistic. They're going to be on an actual, the real traders are going to be on an actual platform somewhere, offering their trades. If they are anyway, they're not going to be on Telegram or anywhere else like that.
Yeah. Ask yourself, what's in it for them? What's in it for them to give you signals based on whatever fee they charge you, right? The only thing that's in it for them is taking your subscription money. They get enough people. You get 1,000 people and you charge all of them £5 a month. You've got £5,000.
Yeah.
Don't need to trade, right? So think about it, as LJ says, think about it. What's in it for them? Why would they do it? The only reason they would do it is to get money from you, and their signals are not going to be valid. They are not going to be accurate. And as LG says, if they were, then the big banks would know about it and they'd find it and they would change the algorithms to take them out and to stop the signals from working in the first place.
And even the people following the algorithms would be able to link up to that for a couple months. They'd be very wealthy. You'd have cleaned up, you can retire, and then that's it. And then there would be no business around it, right? Like everyone would be gone, right?
Yeah.
So it doesn't make sense for it to continue, right? So you got to be very, very dubious, very questionable around that, okay? Yeah. So just stay safe out there.
Rubium says made a really good point there. He says, by the way, all good signals are available for free in any platform you trade. Exactly right.
Yeah, exactly. Yeah, most brokers will give you the better signals than that, right? Because they want to actually help you trade, and to a degree, they want you to retain amount of profit so you can keep trading to generate more commissions, because that's how the broker makes the money, and so you're better off doing that. And to be fair as well, a lot of these signal providers, they don't do any of this. Like they have it automated through that, where they copy someone else's thing, and it's not even them putting out the content or the work, and they just pretend to, right? So just be very cautious.
Yeah, and I think what Ruben was also just trying to allude to was you can get the signals yourself on any trading platform by analyzing the charts and by using the indicators that are out there and everything else.
Oh yeah, for sure. Sorry, yeah,
don't please, guys, don't go looking for signals. Please, I beg of you.
Agreed.
Just don't do it. I would hate for anybody else to be facing the losses and everything else that I went through when I first started trading. So
same way that no one else is going to give you six-pack abs, right? You got if you want to get fit, you want to get lean, six-pack abs, whatever. You got to do the work. No one else can do it for you. Right? Even if you get a personal trainer, you still got to do the work. Yeah, exactly. It's the same thing. At the end of the day,
someone just texting you, do 10 sit-ups.
Yeah, exactly.
Yeah, exactly. Guys, signals for like, all right, hours up. Yeah. You gotta get back to it.
Yeah. I've got to shoot off, I'm afraid, guys, but I'll let you know next week if I've taken a trade. I mean, this is looking promising for me, but yeah, I'll let you know, and hopefully these guys.
The pending trade hasn't been set yet, so we're waiting for the pending.
Yeah,
and then we're waiting
pending order
to be triggered. So
keep us updated, Griff. I'm very keen.
I will,
boys. Do keep an eye on gold, because I am curious about what you see, because
I've marked it off here.
Myself, eventually, I am looking for a sort of swing trade as well. So I'd be curious if what I'm seeing lines up with what you're seeing. So keep an eye and let us know.
Griff is going to build us into suspense. It's like the biggest anticipatory trade of like, when's he going to take trades?
I won't force it. I'll let you know. I'll let you know what happens, guys.
Cool. Cheers, mate. All right, guys, we'll be back in a second right after this.
Hello, guys. We are back. We never left. How are you doing? If you're just joining us right now, let me know in the chat. How is your trading day going? I'm eager to know how you guys are doing. I heard a little bit of six-pack abs. I loved it. I like the analogy. I liked it, LJ. All right, so let's look at the market. LJ in the background giving a thumbs up for his six-pack analogy. I liked it. I think it's a very, very good on-spot comparison, because that is exactly the reality of the things in life. We typically want to have, the shortcuts. Our mind Human, everyone looks for a shortcut. We talked about this on the podcast not long ago on the ABL podcast, that the human mind is constantly looking for the most efficient way to do things, right? That's how evolution works as well. And if you do the same thing, like look for that efficiency through shortcuts, you're gonna come to those areas where you're trying out things, without putting out the work. But that's not how it works in trading at all. You cannot get profitable consistently by following someone else. It doesn't work like that. All right, so there was someone who asked not long ago, before we left, the email address to write us if you are interested in joining our stream. If you are, passing challenges, you're seeing results that you'd like to share with the audience. You want to, share your process perhaps, or maybe something that you noticed, maybe just your success, celebrate it as, as a member of our community, our tribe, right? That's how I see us. That's how I see you, right? At home, watching us, we have a connection, right? Don't we? Right? If you feel you want to contribute to our community and come on our stage and share a bit of your trading, then email us at that email address. So just put it in on the chat and we will go through and see if we can make that possible. There was someone asking before if there is, where can they email? So just put it there. Andre has a very beautiful way of saying it. Shortcuts leads to shortcomings. Couldn't have said it better myself, more on point. There is no shortcuts, right? Of course, you have to look for the efficient way to do things in trading all the time, right? Not lose time, not waste your time on things that are not efficient in your progress. But there is no way of avoiding the hard work, putting in the hours, hundreds, thousands, yes, thousands, not just one, many thousands, plural, of hours into your trading to start getting some results. I know it may sound discouraging, but I prefer to give you the truth, the raw truth, so you know what you're against, what you're starting with, than painting a picture that is unreal, because that's just not how we are. G.I. Wu, I'm not Filipino. I am not. Wouldn't mind being, but I'm not. Let's see. Mia or MIA Trader says, Victor, can you share the time period after which you started becoming profitable? Yes. It took me 3 years, roughly, before I start being consistency, seeing consistency, before I could say, all right, I'm actually profitable. Not just a day, not just a few trades, not just a week, but actually my equity curve is pointing upwards. About 3 years. And this can be shorter. It can be much longer. It's all personal and depending on your process of learning. It's a good thing to know how other have taken, how long they have taken, but in reality it says nothing about you, because every one of us take a special we take a special journey path to profitability, right? Some are longer than others, and that's just fine, because we're not equal. We're all individuals, and every one of us will have an individual path to success. The only thing I can say, though, that is universal is it is possible. Yes, it is possible to reach profitability if you work hard enough, if you really, really want it, and you do the right steps, not shortcuts, but you do the right things to progress towards that goal. If you don't know what those steps are, stick with us, and we will, guide you through it. I don't mean just today, but I mean, be part of our community, and you will see the process that we go through, we went through, and we go through as we grow into bigger profits. So that's something. We have Deanna in the background. Deanna, let us know whenever you are ready to. Oh, you are. So that is awesome. Let's see where we have the right. There you go, Deanna. It's
Hello,
a pleasure.
Victor.
It's
Good
an
to see
honor
you.
having you again with us today. As always, I get excited to share time with you, Deanna. That's a lovely way for me to pass my hours today.
Same, Victor. We missed you yesterday.
Yes, I miss you too, by the way. So
Hi, Marina.
we have. How are you doing, Deanna? How was your day yesterday? Today, how are you coming along on this new week?
I'm doing well. Hi, Andre. Thanks for saying hello this morning. Or morning for me, probably not morning for you. I'm doing great. It's been fun trading gold the last couple days, of course. And is my voice loud? Yeah, so I've been doing good. Doing great. How about you, Victor?
I'm happy. I'm usually happy, but I'm very happy today. I'm energized. I'm doing well. I'm enjoying life. Basically, I enjoy being a trader, and it gets me excited. It doesn't feel like work. I do it. I can't wait for. I don't trade cryptos, but I can't wait for the Mondays to come to trade. That's the best indication that I'm doing the right thing for me. Isn't it, right? If you can't wait to get to your job, it's not a job. It doesn't feel like a job. Job sounds boring, but I mean, let's call it job because that's the common word. If you can get, to the starting of your job, then if you can't wait to get there, isn't that the best way to, be productive? When you're, I have to pull myself from the. Doesn't that happen to you? I have to pull myself from the screens. I have to impose a timer, right? An alarm. Okay, you need to stop, because if I don't do that, time will fly, and my significant other will not be very happy.
They would never see you.
They will never see me.
That's right.
But that's the life of a trader, right? We breathe, we live, we experience trading with every fiber of our body. At least that's how it seems.
Yeah, that's right.
Yeah, let's see. We have it wasn't that loud. That person was just kidding, just enjoying your beautiful voice.
I wish I could have a lovely accent. Like I would pick New Zealand or British, but definitely probably New Zealand would be my top choice. Instead, I have a Midwestern accent, and even when I hear people from where I'm from talk, it's intense. So I get it. It's totally fine. Hello, William, Claudio. Good to see everybody.
Sure. I can appreciate other accents as well, but I like yours. I'll be honest with you. I like yours. It sounds beautiful to my ears.
Thank you. And I know William had a really good question or comment yesterday, so maybe we can get to that in a little bit. William, maybe if you want to repost your comment or question, I would love to address that today.
Okay, perfect. We have Alice in the chat as well. Alice was before as well. I was an hour, like 2 hours ago. I was on as well, and Alice was asking some very good questions and about the time it takes. I was just talking while we were coming on, the time it took me to get to profitability, and it's about 3 years before I start really seeing enough, not just a little bit of a profitability, just a little spurt of profitability, but consistently seeing it, period after period. And Alice has 2 years already, and I'm still losing. Well, Alice, that's okay if that's the what's actually happened. If those are the facts, then it's okay, no problem. However, I would like to put the emphasis not on how long it's taking, because it's not a race. It's
Right.
nothing wrong with that taking, longer or shorter. That's not the metric we should be looking, or the way to look at it. What we need to do is make sure that we go through the process properly. How long ever it takes, it doesn't matter. And you mentioned you're still losing, and I understand that's just a fact. That could be just a fact. However, I would challenge you, Alice, to, instead of thinking in terms of winning or losing, thinking about your growth, thinking about what you can do now that you couldn't do a year ago or 6 months ago. And instead of saying, I'm still losing, you should ask yourself, but I'm growing, right? I haven't reached it, but I'm growing. But I'm no longer losing, or maybe I'm losing less. But now I don't blow up accounts. I don't pass challenges, but I don't blow them anymore, like I did before. These are little steps towards profitability, because they're between starting from zero and reaching profitability consistency. There's many gradation, right? There are many steps in between that are equally important for you to get to profitability consistently. And just it's someone who is, let's say, in secondary school, like in high school, and thinking, I haven't graduated yet. Yes, you're working towards that graduation, but there are many years you have to pass the year, pass exams, pass semester, the subjects. There are many little steps towards that goal, and it's much better, in my opinion, to focus on, I'm doing great this year, I have learned this much, I can now do this kind of algebra or calculus, or continuing with that analogy. No problem. Continuing with that analogy, right? Focusing on what you have instead of what you don't have yet, right? That may be putting the keeping the vibe as positive as possible, while still keeping it real, right? Not exaggerating anything, just focusing on the positive side of things. All right, so we have let's see, we have many questions in here.
Yeah.
Ooh, is this the question from yesterday, William? Is that a question from yesterday? I have it. Let me see. Is this one? Is that a
I
question?
don't think he posted it yet.
Okay. All right. No problem.
So we can
be in
still
the
go
lookout.
over it. But I just wanted to add to Alice, and for any traders that need encouragement, 2 years is actually, I hate to say it, but that's actually pretty short. If you think about it, you're trying to get your doctorate in trading, and that's going to take, Victor, you said 3 years. That's a very fast learning curve. So great for you, but for most of us, it's going to take longer than that. And I like what you said, though, Victor, looking back at kind of like in the rear view mirror to see where you were. I do that all the time. I try to pick different points, where I was when I first started passing prop firms, where I was, or funding companies rather, where I was 6 months ago, where I was a month ago, what has changed, what has improved. Instead, shifting the focus from what's not going well into what is going well. What are you doing well? What are your strengths? Like somebody else asked about holding to take profit. Maybe that's one of your strengths, is that you don't have an issue with that. You really hold well. Finding what you're doing well and try to really accentuate that and capitalize on that can be not only very encouraging, but it can help you do more of the right things.
Certainly, I certainly agree with that, Deanna.
Can we highlight the next question too? There's a really good question. How do you combat the urge to take profits manually, especially as price approaches take profit? That's a really good question, because I think a lot of traders struggle with this, and sometimes it is correct to close the position early, right? Sometimes it's important to hold, and sometimes your decision might be to take the profit early. And the best way to combat that urge, I think, is really focusing not on that single one trade, but thinking of it as a portfolio of trades. So there's no right or wrong answer here. Your answer might be, I am a fill or kill trader only. Once I put in my take profit, I am hardcore, that's it, and that's the way it's going to be. Or you might be somebody who allows exiting early. And that's fine too. But making your decision, knowing what your statistics are, can really help you feel confident in that. And then thinking about your trading as a portfolio of trades. So unless it's 30 or more trades, it's not enough. Thinking about one trade is not enough to tell you anything. And then whatever you decide, so let's say that you do decide to get out early, that's the decision you made. That's the best decision you could make with the information you had at that time, and you have to move on. So those are kind of suggestions that have helped me. A lot of great questions. You guys are great. I'm trying to read through everything here.
Yes, certainly so. I think the you hit it on the spot. There's a proper time, a correct time. There's nothing as that, the only correct thing to do is the one that you validated with data, in my opinion. But there is a correct way, even if you don't know everything correctly, completely. Yeah, there is a moment to cut your trades short, take profit before TP. However, how do we know when is it correct or not to do that? When is it the right thing to do? And by focusing, what you said is so true. If you just focus on one trade, that is, just playing, what the result of any single trade has a high degree of randomness to it. So it doesn't make sense for you to adjust your trade plan or act upon things or make decisions on, change your plan based on just one or even two or three trades, because you could just be looking at a random stuff. It may convince you visually, and maybe you may have a gut feeling, but on just a few trades, it doesn't make sense to do any changes. And Deanna said, looking at a greater number. You mentioned 30. That's a great start. And base your decisions on the bigger picture, the bigger number, the group. If you said the active trade management, right, against the passive trade management, meaning the passive trade management, you set and forget, you get in, put your stop and your stop loss and your target, and you leave it. And the other one, you actually look for more information to make a decision to either leave it or to pull it off before the end of, before it hits one of those two, stop loss or target. Whether you do active or passive, the only way we can do that and knowing what is right to do is that you look at your numbers. Look at what, the last 30, and 30 is just a start, right? Less than 30, don't even start, making any changes yet, because it's not enough. But 30, you can get or 50 or some number around that range where you can start making, okay, what if I did the last 30, 40, 50, whatever trades, if I did close the position, at a certain with a certain criteria, look back and see if it would have made a difference compared to set and forget, passive trade management. If it did, maybe it's not conclusive yet. Maybe that's something you need to look, investigate further, right? More time, more testing, and maybe refine it better. And after having convinced yourself statistically, then you can start deciding for yourself if you need to do it all the time. And maybe you don't have to do it all the time, but at least there are certain moments where you need to be able to do that. One thing, for example, that I do is I close my trades, not all of them, but I close my trades at the end of my trading session. Right? That is something that I tested. I saw that it makes sense. I lose less. I make more profit. I keep more profit if I, at the end of the day, close my positions. That's very simple. right? But there's no way to know if this is right for you, because what is right for my strategy might not be right for yours, is by consulting the data, looking back at not one, two, or a few trades, but a good sample size, a good number of trades, and let the numbers speak for themselves. There's no better way to do this. We have a lot of questions, Deanna. Let's see which one. You're muted.
Sorry about that. You're
No
right.
problem.
There are so many great questions here, and I'm just kind of like working back a little bit. Andre said, isn't it interesting that you have to first know yourself well before you can truly become a professional in anything? And that's so true. I think too, what's interesting about that is it's an ongoing process. So Andre's completely correct. You do need to know yourself, but you will continue to get to know yourself, right? You will change and evolve as a person, and maybe your trading will evolve over time, but it's a great point. And then there's a couple questions about how to find a profitable strategy. So Storytime asks about how do I find a strategy that can make me profitable? And I saw somebody else ask that too. This kind of touches on what William asked yesterday. And so if we want to touch on that, we can, let's come back to this one, but let's just run through a couple more comments and then we can swing back to this one.
Sure.
And I love what William said here. If it's not a real account, it doesn't matter at all. Just learn what sort of tradings there are and find the one that matches you best. I love this comment. This for me is what I would say was like the most helpful thing. Someone else lower down asked, what would I change as a trader? Or what would I change from the past? And that all kind of ties into this comment here. One of the things that propelled me the most as a trader was I made a decision that, contrary to what you hear about sitting on your hands, being disciplined, being patient, all these things, I decided that I was going to just trade to my heart's delight. Just as many trades as I could take, I was going to take it for a temporary period of time. And you can do this in the cheapest funding firm account that you can find, or you can do it on TradingView as paper trading. And the reason that I did that was because until you know what you're looking for, you don't know what you're being patient for. And I found it really frustrating to be patient when I wasn't really sure if that's what I was looking for. Do you know what I'm saying? So if you know what you're looking for, then you can sit back and be patient. But when you're still developing a strategy, putting a strategy together, you don't know at first what's going to work and what's not going to work. And not only that, but what combination of things. If you try to trade somebody else's strategy, more likely than not, there's going to be some element that you're missing, right? Nobody can reveal everything to you. Even if they tell you everything, there's some aspect of their gut feeling or their intuition or their personality or whatever that is going to be different than you personally will be. And so was extremely a game changer for me to just say, you know what, I don't think discipline or patience or any of those things are serving me right now, because I don't know what I'm looking for fully, right? And so how to find a profitable strategy, again, we can come back to that, but I think one of the best things is William's comment. Just make some trades and really learn what you're doing. And when you do that, even on a free TradingView, paper trading account, when you're making the trades, it feels a little bit more real than if you're just sort of back testing or going through the past. And part of that reason is because when you're back testing, you can immediately skip to the next trade. You can, hurry up and click the buttons so time moves forward. And you don't have that as, when you're trading either live or you're forward testing. So in other words, maybe you're not putting real money on the line, but you're placing trades. You don't know what the outcome will be, and you don't know how long it's going to take. So I really highly recommend that. that was a huge game changer for me.
So you think, given your experience, that going and taking trades at the beginning, when you still don't know what kind of trader you are, how you handle your feelings and things like that, you recommend to just hit it and analyze how it made you feel and what strategies align better with your person. That, do you think that helps you in becoming profitable more faster by doing that exercise?
I don't think I personally became profitable fast. I think it was a really long journey for me. I can't even really tell you how long it was because it was kind of fluid. And I'm the type of person that likes a right or wrong answer, right? I like to do it correctly. And with trading, that doesn't exist because there are infinite ways that you can do it. Letting yourself take every single trade, yes, I guess it's about emotion to an extent, but it's also, for me anyway, I was really unsure of what it was that I, like understanding how price moved, understanding how a process worked, a trading process. And so for me, it was less about the emotion and more just kind of figuring it out. It's kind of like dating. If you never date and you just, I know this works for some people, so I'm not knocking that. But if you are interested in finding a partner, right? You want to get to know what's out there, and you want to see what you like and what you don't like and what works well for you. And maybe you think you find something, and after a period of time, you realize, you know what? I guess that's not what I'm after. I think trading is a lot like that. Like, we shouldn't have to just marry the first thing that we find, right? So date around, get to know your system, get to know what works. And also, once you do kind of settle on something and you think, oh, I think there's some potential here because I've been placing trades on whatever it is. I've been placing trades and this seems to be working. Over time, you might be able to refine it even more. So, for example, I typically trade the New York session, and I recently switched to gold. So using the same strategy that I've been using, but my profit factor was higher in gold. So I switched to gold. And as I'm now trading gold, I'm realizing, this is a little bit different than the indices. The New York session doesn't work quite as well as the Asian session for gold. And so you can make these like little pivots and little changes. I guess, to take that relationship analogy a little bit further, it's kind of like in a marriage, you kind of pivot and you learn how to communicate better and you make changes and maybe you fight a little bit and then you resolve it. It's not like, I always use this example too. It's not like riding a bike where in the beginning you kind of don't know how to do it. Maybe you fall down. And then once you figure it out, you pretty much are set, right? You pretty much know how to ride a bike. And for the most part, unless something crazy happens, you're not going to fall down much, right? Trading is not at all like that. I still fall down. Sometimes I fall down, pretty intensely. And I just think that's part of it. So really freeing yourself in the beginning when you're sorting out, if you can't honestly say, I know what I'm doing, I have this strategy, I know, this is how I do it, that's a really great way, is just date around, explore a little bit and see what works for you and what you like. Just like somebody said, really getting to know yourself is such an important part of becoming a trader.
Yes, on that note, Deanna, I was wondering, how many did you dated strategies before you chose? You chose.
I dated a lot of frogs. Let's say that frog strategies. Okay. No, I did. Again, it is a lot like dating. Some were just like, hey, let me try it out real quick. Let me see how it works. And then some stuck around longer, right? Some I really thought, okay, this has potential. And maybe it worked. There's one strategy in particular that I used that worked really well. I found profitability with it. But I wasn't really able to feel like I ever achieved consistent profitability. And a big part of that was feeling like there was too much ambiguity, too much for me, too much flexibility in the trades I could take. So I was doing the same thing over and over again, but I wasn't able to really feel like I achieved consistency there. And so then I ended up, after a long time, going on to the next thing. So I don't know how many, but there were quite a few.
A couple of dozens, so it
I'm
seems.
sure.
Okay.
That's just part of it. You know, that is just part of it.
And you mentioned frog. Does that mean that you kissed one and it turned into a prince or not?
I found my prince. Yeah.
Okay.
Strategy prince,
Nice.
that is. Yeah, absolutely. But again, you gotta kiss a lot of losers to find the strategy that's gonna fit for you.
Perfect. I like that. I'm sure the it's a good analogies for everyone to, to bring it back to something relatable, right? Something that we all know about dating, looking for a partner, for example. It may sound silly, but it's actually true. By using analogies, you can put things into perspective, and it stops being that abstract, and you can actually apply. You can actually learn from your analogies, even if they sound silly. You can apply things you would in the comparison to this problem, and that's how a very simple way to come up with good ideas. Someone saying gold is rushing to all-time high again. Perhaps it is to me, in terms of the order blocks, it is not on the H4, but certainly on the H2, not even there as well. Actually, I should take this out. It already broke out. This was the last structure on the H2. Maybe I should put it on the H4 to see anything. No, there isn't. So this is the order block. Has been already taken out by a couple of hours already, and it retraced back for that break and retest, and it looks very solidly bullish going into the session today. We have tomorrow, of course. Let's not forget, tomorrow we have the interest rate decision of the Fed. So this could be a preemptive move before tomorrow's decision. So keep that in mind. It might surprise us, things can change completely, or this could be the beginning of a much bigger move, like a two-step rocket, where this is the first one, and the second one is when the news comes out. So we have such a great audience today, Deanna. We have a palette of many questions to choose from. I'm having difficulty, honestly, choosing the questions right here.
I know there are so many good ones. And someone else said,
Yes.
Do you think when a trader suffers a loss, there's a desire in your mind to avenge that defeat? Does this have anything to do with the human brain? Absolutely. I'm reading an excellent book. Maybe we can talk about it as I get a little bit further into it, called Scarcity Brain. And it is exactly related to your brain. And the faster that you can place a trade, that is like even more compelling for us. And so with the way we trade versus like, a pit trader 40, 50, 60 years ago, where they had to call in and place their trade with a broker, we can do it instantly. And so it is a very, 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 we're very susceptible to things like that, to try and revenge a trade. And I wanted to look at gold as well. So if we can switch over just for a second, we talked a lot about gold yesterday. And this has been a really great trade to make so far all week long. And we talked about yesterday how gold and the indices tend to move inversely to one another. So on my chart here on the main screen is gold. On the right top is the S&P, and the lower bottom right is the NASDAQ. And the first thing I want to point out is I have the previous day high and previous day low marked out for each of them. That can be really, really helpful. So when I was trading gold last night during the Asian session, for me, that's the evening, one of the things that I was paying attention to was when the NASDAQ first tumbled below the previous day low, and then it kind of skirted around, kind of popped back above, and then eventually just nosedived. And when that happens, that could be a really good indication that we might see the opposite move in gold. And sure enough, that is what happened. And the S&P did eventually catch up. So that can be a really great, kind of a cheat code to pay attention to that can really help you out. And so gold has made this really nice. We've been seeing this a lot lately. And these kind of like, I don't trade flag patterns, but I pay attention to them. So it's kind of like this this push that happens, and then this consolidation. In this case, it's kind of like a, I don't know, triangle type shape, and then a push higher. So that would have been a really great area to trade here. And then we saw another version of that here, where it's this really high push up. This is all-time highs up here. A pretty big consolidation, and I have it also as a triangle, but it's really more like a descending flag here, kind of like this type of action where it kind of channeled down and we're seeing a push up, and then, potentially we're going to see like a continuation higher. So that is something that I'm kind of paying attention to. And if you drop down to a lower time frame, this is the daily time frame. If you drop down to a lower time frame, this is the 30-minute chart, and you can see kind of the same thing. So last night I was trading with my teenager. He's wanting to learn how to trade futures, and we were this is the open here. So this is when the market opened at 6 p.m. Eastern time. I'm not sure what time the Asian market opens where you are, but it opened. It created this little range. Oh, sorry. This is yesterday morning. So here it is. Okay, here is the Asian session open. Price created this little range and then dipped down. Spent a little bit of time below, but I was looking at this, nice run up, this little pendant looking thing, and looking for an opportunity to enter. And so you can see price was kind of below the opening print, but really was holding nicely and couldn't get much lower. And then finally we got this huge explosion out of that, pendant shape. Price almost, less than an hour and a half shot up all the way to, this is an expected move based on the volatility, the VIX. And now we're starting to see price move even higher. So I marked out the opening range Tuesday, today, and price has already, it kind of danced around in the beginning inside that opening range. And now we're starting to see price push higher and move higher. So this is once again back to recent highs. This is the ATR percent. So we moved now past the expected move, and we're heading up to, it looks like, the 75% ATR. So this has been a really nice move in gold, and something to keep an eye out for if we're going to see some kind of, it might not be as long as this whole action here, but it could extend up a ways. We never know what's going to happen. We can make money without knowing where price is going. But to me, this is kind of reminiscent of this. And if you notice this, if this is the flagpole, okay, if that's the flagpole, it's kind of similar to here. It didn't go as much, but it gives you an idea of what you could maybe expect. There's no guarantee there. But you might see something like that. This is a pretty huge move here. This to all-time highs was a huge move. So maybe you would only want to measure like to there. And if that's the case, we could maybe project some kind of move, higher, something like that.
For sure. You mentioned expected move. What is that based on?
The expected move is based on first of all, it's this indicator, daily ATR levels and expected move levels. me see if I can find who the creator is. Daily, it's here, it's this one. Small Tilt. This is a really great tool to use. It's not really an indicator. It doesn't indicate anything, but it's a great tool to use. And it's not my tool. I didn't create it. It's a free tool on TradingView. But what it does, it's this right here. So you can set it to, so this part that's disappearing, you can set the settings to what you want. And it looks at the ATR from I believe it's the daily only. So I have it set to 7 ATR. So that's the period it's using for the ATR. And it's looking at ATR and projecting it from the daily open higher and lower. So you can kind of get a sense of where you are in the move. So like yesterday, when we were looking at it yesterday, it stopped right at 100% ATR, I believe. I think we can go back and do a replay. Well, anyway, I believe it was right around 100%. And so, you know, if price were to get up into this 100% level, it might not make it there, but it's a pretty good indication that that's probably, you know, that could be the end of the move. Again, there's no guarantees in trading ever. But that could be something that you could look out for. Like, you don't really want to be adding, most likely. Excuse me. It's not a hard rule, but you may want to be a little more cautious about adding as you get into this level here.
One question, does it project the expected move? Does it calculate it only on the daily open? Does it have any other choices?
On this tool in particular, sorry, I'm getting all kinds of alerts. On this tool in particular, I don't believe it gives you options. You can change the ATR length only. And so you could manipulate, like, for example, if you wanted it to be, you know, based on, like, let's say a 4-hour ATR, you could do some math. Is that what you're asking? No, you asked about expected move.
No, the starting point, the calculation,
okay, yes.
because the thing is, with ATR, this indicator would be very helpful, is very helpful, especially when the open of the day is close to the low of the day as well, because the ATR it measures not only from the open but actually the high and the low of the day, meaning as the day progresses and, you know, the low of the day is much lower than the open, then the expected move is corrected, because it's a range. So I was wondering if this indicator also give us that option to have a different calculation where it takes into account the low of the day, which is something that, you know, evolves during the day. So it's not something that helps you at the beginning of the day, but at some moment it does help you, because it's the range which is the limiting factor of the move, right? It's the actual range, which means from the low to the high, or from the high to the low if it's a bearish candle.
Right. And this tool in particular does not. It's from the daily open only. But what you could do is create a tool like a fib. So this is a fib tool, and I'm not using it as a fib tool, only as a measurement tool. So I have I created, sounds like I'm giving myself too much credit. It's not, I didn't create it, but I just put it on 0, 25, 50, 75%, and 100. So it's the same exact thing as this tool here. And then you could do it from anywhere you want. So if you want it to be from the low, I would use that to measure. I would get rid of this tool because I'm not using it for that. And there we go. So if I wanted to project it from the low, I can see right now we're at 75% of the total day range. Is that what you're...
Exactly.
Okay.
Yes.
Yeah.
Yes,
So yeah.
it's taking the ATR and
Mhm.
expressing the current move today, in terms of that ATR because of the fact that it's a range, and having an idea how far it can still go based on the ATR, which is the ranges of the last couple of bars, etc.
Yeah, that works
Good
too.
stuff.
Mhm.
Good stuff. Let's. We have many questions in here about. I think I selected a couple of them. Let's see. Someone asking something about our programs. The cheapest or the lowest price for any challenge we offer is the 5K high stake account, which is $39. That is the first, the least expensive one. So it's a good trade, depending on your financial situation. It's a good testing program if you want to do what Deanna suggests, to just start trading different, not having a specific strategy yet, just try out different ideas, but you want to do it in a with some skin on the line, skin in the game, money on the line. Then this could be a good thing, right? Only $39, because that's the thing with backtesting. There is the emotion is very limited. The issues we have with real time trading, when we actually can lose money, those emotions are not present when we're doing backtesting or paper trading forward tested. So it's the closest you can be to real time is actually having something to lose, right? Where it actually hurts a little bit when you lose it, even if it's only 39, it's still money. So but it's best you do it with an amount that is okay to lose. It's not gonna push you into bankruptcy in any way, shape, or form. So yes, I think that's one of the that's a very good way to taking it. We have also this question. You go ahead.
I just want to pop in there. There's a couple questions about finding a mentor. And, that's one of the really tricky parts about being a trader is, as somebody who's paid multiple times to get help in the past, the biggest help came when I did it myself. So I know it's really helpful to have somebody that can offer you feedback, but to get started, I think this is a really great place to kind of learn about other people's trading styles. And you can find all kinds of information on YouTube as well. But ultimately, you do have to kind of put in the work on your own, which I know everybody here is likely doing. But finding a trading buddy can also be really, really helpful. And for me, that's something that's really made a difference. So I know it probably sounds a little bit odd, but you might end up seeing the same trader in this chat, and maybe you connect in Discord or something like that. Maybe you connect in the YouTube comments. There's all types of ways that you can kind of find a buddy and get some help that way too, as far as accountability or just kind of sharing what your struggles are. That can be really helpful as well.
And not to mention, the The5ers has a Discord. You just mentioned that, Deanna. We have a Discord community where we come together every weekday and talk about exactly these questions, and we analyze the market together. We spend together time talking about our journeys, emotions, strategy, risk management, anything and everything that could help you improve your trading. And in there, right, it's a smaller group, right? It's not the thousands as on YouTube. There's a lot of opportunity for you to connect and perhaps have not one, even multiple trading buddies, which could help you mutually, help each other mutually. And we also have the ABL community, which is geared towards education by traders for traders, right? So it's a very open community where you can contribute with what you have, even if you don't think you're, the master trader yet. Whatever talents and whatever knowledge and experience you have, you can share it and leverage the community's, knowledge or level.
Mhm.
And as you learn from other people as well. So the ABL community is also right there. As you can see, the 5ers is really, really interested in you succeeding. There was a question about prop firm also, how to choose a legit prop firm. Where there you have it. I mentioned it before. Look for a prop firm that has their interest aligned to yours. All right, what other prop firm is so focused and invested in you becoming better, not just buying the account, actually becoming a better trader, actually having professionals like Dr. Deanna Cole here twice weekly, to giving you, just for you, to make you a better trader. That's how you recognize a legit prop firm, right? So it's using common sense, but especially looking for those telltale signs that they're in here for you.
Mhm.
They're not interested in your you buying the account necessarily. It's about growing as a community, as a it's a collective effort, right? We need you to be a good trader for our private fund to keep on growing, because that's what the 5er is. It's a private fund who is looking for traders, good traders, to keep on creating and giving the good returns we're looking for. So it makes sense that we need to cater to their growth so that we can make more returns on the capital.
And a lot of people are looking to connect. So, I don't think that is an uncommon struggle. I think I hear from traders all the time. And I know for myself personally, that is the whole reason I am on X or I'm on YouTube. It's only because trading is very lonely, and I'm also interested in this topic. And so finding other traders on X, on YouTube, that's a great way to find people who share your interests, maybe share a style. Maybe they're in the same, kind of at the same level as you. Maybe they're a little bit ahead, so they could help you in some ways, or maybe they're a little bit behind, so you could behind your level, so you could help them. There's all kinds of ways, but I really think connection is a huge piece of, helping yourself as a trader. It also just makes it a whole lot more fun. I have a trader that I check in with, and he checks in with me, and it makes it just a whole lot more fun and interesting. And if something goes well, then we're excited for each other, and if something goes poorly, we're like, oh, you got this, you'll be fine, you'll get it back. So somebody was asking about your Victor, about your YouTube, but I don't think you have a YouTube, right?
I don't have one. Actually, I do have one, but it's not active. I opened it just to start, but I don't have contents on it. So basically, I don't have something to. You can find me here. This is the best place you can find me, on the YouTube, the 5ers, or in Discord as well. And soon I'll be putting some content as well on the ABL community. Yes, some order blocks, some quasi with time courses, and we will have workshops, maybe some classes, seminars, webinars, you name it, anything that we think that will be able to help you become a better trader. Mm-hmm. But no Instagram or X on my part. Maybe in the future, who knows?
Yeah, it's fun on X. I enjoy X. If anybody wants to look me up, Dr. Deanna Cole. It's the same username on YouTube and on X. And X is fun. I think there are a lot of very serious and also seasoned traders on X. So I think that's a great spot. And Maya Trader is asking about what our monthly returns are over the years in trading. So I don't fully share that on all my accounts, but I do have some where I kind of give a deep dive explanation of what my returns look like. So specifically, you can see it on my X, but I go more in depth on my YouTube channel. So you can check out either of those if that's helpful to you.
Awesome.
What else? It's almost time to wrap it up. So I'm just trying to quick breeze through these and see if there's anything
Take
else.
your time.
There's a good question here, but about how to find a profitable strategy that's kind of was along the lines of what we talked about we were going to get into, and we just ran out of time. Maya Trader, do you guys rely on one strategy only, or does your major profitable trades come from one strategy only? For me personally, I've shared this before. I'm kind of like a short attention span. Like I'm drawn to shiny objects type of mentality. And so for me, the more I can say no to everything else, the more I can focus just on what I want to be doing. So I trade, I've narrowed it down to a strategy or a style that I am comfortable with, that I'm okay with trading. I trade only that. And I typically trade only about one asset at a time. So before it was the indices, and then I switched recently to gold just because I found that my profit factor was much higher with gold. And I will try and stick, 100% to only gold. I see William still watching gold, watching for the breakup or breakdown. I'm looking for a move higher, but we are getting to close to the 100% ATR. Let me take this off here. Actually, we'll just move it out of the way. From Victor's, talking about what we talked about before, the 100% from the low of the day, the ATR move, we're getting close. But we're also approaching ATR 75% from the open. So I'm looking for gold higher, but, we are starting to get, I'm already long. I've been long for a while now, and I might add at some point, depending on how things go, but it would be a very light add just because, we're getting closer and closer to the predicted, not predicted, but the 100% ATR move.
Awesome. I would like to invite everyone who hasn't had their question answered to come join us again tomorrow on our live stream or any other day you can. We will be here. We are here for the long haul, right? This is a long-term commitment we have with our traders, our viewers and traders in our community. So awesome, Deanna. Thank you for all those great tips and those great advices you always have up your sleeves for our traders.
You're so sweet. Thank you, Victor. Thanks everyone in the chat, and we will see you next time. Bye.
Bye. All right, so here we are. This is the chart from gold. Actually, this is from gold. We have Ashley in the background. Dr. Cole, thank you for being with us. There's a lot of people who are always very interested in Deanna's content. All right, so Ashley, are you ready to? Yes, you are. So here you are, Ashley. How are you doing today, Mister?
Good in yourself, Victor, and hello to all the viewers. Hopefully everyone's doing well, keeping well.
Thank you. I'm doing well. I'm happy to see you. You're always you're always in good mood. That's good.
Good. Yes. How can you not be in a good mood when you sharing valuable information with everyone?
Right. I feel that too. It makes me, trading in general. I get excited. I get up in the morning. I get excited. I want to be trading. I want to see, what my strategy is going to do today. I want to, improve this, either be testing or whatever I'm doing. It gets me excited. But sharing it, I didn't know this from before. Before I was only a trader. But sharing it has its own thing to it.
Positives.
Its own positive. Yes, it has its own energy that is released when you're actually able and then enjoy it by being able to share. And the ultimate feeling is when you're sharing it and people come back and say, Victor, I passed the challenge. I got a payout because of this or that helped me, whatever. That's the best. There's no better motivation than getting feedback like that from our viewers.
Indeed, I fully agree with you there, Victor. And it's a two-way street, meaning that not only is, as the term mentions, sharing is caring, but at the same time, for you as a person, and that's the skill set. It reinforces the skill set. So maybe there's something you might be working on by sharing a principle or a topic and an interest. It all reinforces for yourself to remember, yes, I need to keep on doing this, or this is what I need to remind myself of. So very positive indeed.
Perfect. We have someone, Paul Sebastian is asking us for the Discord community that I assume it's a Discord community of the 5ers. Paul, the way to get your entry into our exclusive community is by buying an account with the 5ers. Whenever you buy any account, can be $39, doesn't have to be any other. Once you have the account bought and you have your client page, right, the hub section, on the lower left corner, you're going to see that link, that Discord icon you can click on, and that will be your entry into the community. And that's it. You don't have to pay for anything. It's just something that you get for free with being a trader at the 5ers. You don't have to even be a funded trader, just a trader. Just buy an account and you'll get access into our wonderful community of Discord of the 5ers on Discord. Thank you, Prashant, for your nice words. Okay, perfect. Ashley, I would like to allow you to tell us what would you like to touch upon today. Do you have something in particular? Would you like to? Where do you want to go with our conversation today?
Perfect. Thank you, Victor. Before we get into that, just to mention hello to Andre, and then also thank you, Andre, for at least answering Paul as well in the comment section about that Discord to get to the 5ers through their programs. Perfect. Victor, as you always know, I'll always follow your lead. However, I do have some suggestions, and the one suggestion to have is to maybe shift it up. The last couple of weeks I've been speaking about risk, etc. So maybe shift up into charts, and also to engage with the audience on a topic of just the technical analysis. And what I mean by that, which I have something to show in a moment, is you have technical analysis, which is the actual analysis of the chart, and then you got your trading strategy. Now, your trading strategy is born or is derived from understanding the chart. So, and there's many trading strategies out there. However, I don't want to speak about the trading strategy, but the actual analysis. How are you starting that? What are one or two topics that may have, it may seem very simple at start, but has a huge impact in understanding. So that's the idea, to engage with the audience. And then also, as the weeks go by, I'll update the audience in terms of all those programs that I am layering with my strategies to show. So I'm waiting for all the data to come through and building up several different 5ers accounts, which I'll share with the viewership viewers in the next coming weeks.
Perfect. So would you like to put your graph to talk about the markets, the technical analysis from the eyes of Ashley?
Yeah, we can definitely. Let's share my screen. No problem.
Take your time. In the meantime, I want to revisit gold, the breakout that has been, while you're checking and putting up your screen, I will talk about a little bit about gold. Of course, the higher time frames, as we can see, this is not a in-depth top-down analysis. This is just very quickly glancing at the charts. gold has been, on a meteor kind of a trajectory, going up and up and up, making all-time highs every so often. And it's still looking, you can still see that bullishness in gold. Look at that weekly. This is the second day of the week, but look at that weekly candle already. It's already looking almost full size or bigger than many others. So that's the weekly time frame. There is no order block, nothing not actionable in terms of order blocks yet. On the daily as well, we are taking high. We're taking out this. Let me take the arrow. We're taking out the high of this swing point, right? And that, that's the breakout that we have been talking about, right? We on the lower time frame here, it doesn't look like much of a breakout, but on the lower time frames, you can see on the hourlies, you can see there we have a clear. We have been in a. We had a supply zone here, which was broken. As you can see, that this is one of the ways you can indicate that supply is broken, retested, and continuing to the upside. So, and to the left, as you can see, there isn't a lot of structures to stop price. So that is why traders are looking forward for this move on gold. Coming back to you, Ashley, I see you have a very nice image there. I'm gonna switch to yours if that's okay.
Go ahead, Victor.
Perfect.
Okay, great. Thank you, Victor. While that's up, just to give the viewers some context and at the same time engage with the viewers, can I ask a question of the viewers? Is that who out there in the viewers, or even yourself, Victor, when you started trading, did you actually have to physically draw your charts, meaning collect the raw data and actually draw, and didn't have a charting program or software for it? Any of the viewers out there?
That's a good question, because nowadays those who are starting out now might not know that, but it's certainly a thing. I didn't have to draw any graphs for trading. I didn't have to.
Okay, wonderful.
Yes, I didn't have to. I was gonna say when I started, they were very limited in the options in terms of technical analysis application. There were, but as a retailer, it wasn't that pervasive, very accessible. So I did draw some things on paper, printed out, but not the actual graph.
Okay, wonderful. Thank you for sharing that, Victor. And thank you for some of the viewers' comments. Andre, nope, don't have that patience, which is understandable too. Just to give the viewers some context on where I'm going to come from today, is that when I started out trading the financial markets, that's what I needed to do all the way back in 1998. So there were charting softwares out there, but they were very few and far between. And the lowest time frame that one had was the daily. So in terms of the charting software, but before the charting software, I would take the data from the newspaper, each day's newspaper, and actually physically chart, plotted on a piece of paper, and actually create the chart manual myself. Now, the reason for sharing that context is because there is what I've noticed in the number of years where the interest in people for trading financial markets and technical analysis, they start to lose certain aspects of significance of timeframes and where to start in terms of the analysis. And that context will give you an understanding of the reasons why to emphasize a certain time frame over and above another, which we'll discuss in a moment. So that just kind of gives the context. But if we have a look at my screen, what I've done here is just give you the definition of technical analysis and trading strategy. So if we have a look at the underlined pieces, technical analysis focuses on data interpretation. So that's the topic of discussion, the data interpretation. Remember, the trading strategy is action orientated. It uses technical analysis. So we can't get to the trading strategy before we understand technical analysis. And the discussion is basically about that tech analysis. Where do you start and what do you emphasize more or less of, and to put things in context, or to give a different aspect from my experience in terms of areas when you're doing technical analysis. Okay, so that's the focus for the discussion. And please, audience, engage and ask your questions and give me your thoughts as well. That'll help myself as well as all the other audience. Right, so if I minimize that, okay, that's just all the charts all together. Let's go on to, it's going to take some time to load. There might be a delay. But the main thing I wanted to find out as a question or a topic to start is, when we're speaking about technical analysis, and we wanted to find out what is basically the trend, or how is this symbol moving, which time frame does the audience always go to first? So obviously you've got different time frames, and we generally analyze a time frame or time frames, but which is the time frame that is your go-to time frame that says for euro dollar or gold or X, Y, and Z symbol, this is the trend? So audience, give me your feedback and opinion. And then maybe Victor, maybe you want to share with the audience. I think you've done already with your analysis. I think start on the weekly, but you can share with the audience in terms of your response.
Sure. And before I do so, let's not forget to hit the like button. Guys, girls watching us, if you like this content, there's no better way to show your appreciation, your support for Ashley, for all the other people who come on this show to give you to share with you what they have learned from the market as they progressed to become profitable. Hit the like button, subscribe to our channel, and make this channel keep maintaining its growth pattern, because we are growing very quickly. Not long ago we hit the 65,000 subscribers, but we want to grow more. We want to reach more traders out there just like yourself. So don't forget to do that. Coming back to the question, well, I personally, what I do is I start from the monthly, and a lot of times it looks like silly, like a bazooka against a fly, because the monthly I trade, yes, my entries are based on the 1 minute sometimes, and I start from the monthly, and it looks silly. It may look silly, but the thing is that I'm ready to trade all the time frames. I start from the minute, but I'm actually looking always to catch a bigger move from that 1 minute. So I start on the monthly. Obviously, I don't trade the monthly very often, almost never. And then I go to weekly, daily, 4 hour to 1 hour to get my setups. From 1 to 4 to 1 hour, 2 hour, 4 hour is to get my setups. And the daily, the weekly, and the monthly are for those macro biases for me to know if I can swing trade a position. But basically, I start on the H4 for my intraday trades, regardless if there is a daily and or a weekly or monthly signal as well. So it starts from the H4, and I go build my case for an entry on the hourlies. And only if I get one, everything lined up, then I go to the minutes. If not, then I just stay on the hourly. So I don't know if that's the answer you're looking for, Ashley.
That's perfect. It's more about your just a response and what you do. So that's interesting, because there's no like we mentioned earlier in the previous session, there's no right or wrong answer, just a matter of opinion. So thank you, Victor. Victor, just a question. For your macro view, you start with the monthly. So I understand where you start on the H4, but for the macro view, you start on the monthly. Why specifically the monthly and not maybe the weekly or daily? Any reason that you would choose the monthly for your macro view to begin with?
Well, the thing is, the process that I follow is a top-down analysis. So I start at, in theory, I could start at the yearly as well, because there is, it doesn't make sense,
Correct.
because the monthly doesn't, the signal don't come very often. They come maybe, if I'm trading just one pair, maybe once a year, maybe twice. So it doesn't make sense to go to the yearly, but I could. The reason I start with a monthly, because to me, that's the logical next level after the weekly, because the way, it's not only because it's on the chart indicated, a lot of people have this daily, weekly, monthly, but it also have that roughly 4 factor in between. So they are roughly, there are 5 days, of course, into a week, trading days, and there are roughly 4 weeks into a month. So it's that that logical step. When you go from a day to the H4 as well, that's also 6 times. It's roughly 4. It's not exact, but having that roughly equal steps in direction going up and going down makes sense to me, so that the alignment is balanced. Because the monthly, let's say from the monthly to the daily, obviously it has effect, but at least in my strategies, the alignment has to be not too big of a step. So it needs to have the weekly, for example, from the monthly, the weekly, then the daily. Because if it skips one, if the step is too big, then there's a little bit of a disconnect, and the signals on the monthly do not translate, or vice versa, do not translate well. So that just from experience, I use that rule of thumb, about 4 in between. So, and why the monthly? It's just because it's the next step above the weekly.
Correct. That makes sense, because in a month there's 4 weeks, and then in a week you got basically 4 to 5 trading days if you strip out cryptocurrencies. Perfect. Thank you very much, then, Victor. Thank you for your response. Thank you to also Andre. He's mentioned weekly for futures and forex, daily for stocks. Andre, if you'd like, give us a response of exactly why those time frames for those asset classes. Another question, Victor, to ask is that, and to ask the audience as well, is which higher time frame do you think is the most widely viewed time frame across all market participants? Now, when I mentioned market participants, I'm not only speaking about us as retail traders or professional traders or prop desk institutional traders, but the whole market, meaning institutionals, and they form a large part. So all market participants, because we only, us as traders, whether it's retail or professional, is still only a section of the market. So if we take all market participants, which time frame do you think is most widely viewed from the yearly, monthly, weekly, and daily? So out of those 4 time frames, which one do you think is the most widely viewed?
I would say the daily. I would think, I don't have any data, but I would think it's the daily, because a lot of decisions are based on the daily. That's a guess of mine. Obviously, the weekly as well for those long-term trends, but I would say the daily. I'm not sure.
Perfect. And Victor, you're quite correct. Audience, give us your opinion or your thoughts about that question. But let me add some insight in terms of that answer about the daily. And that goes back to my context. So remember, the physical trading of financial markets began way before technology and laptops. However, technology and the internet and laptops and charting software just made it more accessible for the man in the street. But basically, if you go back to the time where it was considered a niche skill or a niche activity, you would find that people would need to physically plot their own charts, like I did when I started. And the traders at that time, retail, professional, or the exclusive niche at that time, they were still human, and we're human today. So we like to look at things moving and instant gratification. We can go down to even a tick chart right now. So they had data and they had to plot it. So the lowest time frame that they could plot was the daily. And the reason for that background is that I firmly believe that contributed towards the daily time frame being the most widely viewed time frame, even though it is important to understand what Victor mentioned, where the higher the time frame, the more significant the analysis. So if we take that concept and understand it, if you take the analysis on a daily, compare it, significance of the analysis on a daily, compare that to a weekly, compare it to a monthly and a yearly, the higher time frame being, the highest time frame being the yearly, would have probably the most significance because of the span it is. But at the same time, we got to balance out what is significant with also what other market participants are viewing, because we also want to be aligned to a degree on the general focus, the general view of how the market's moving. So we balance the two out. The daily, in my opinion, and expertise and experience is the most important time frame. And I use the daily to identify the trend. So the daily is the only main time frame to identify what is the trend of gold, or what is the trend of euro dollar, or what is the trend of the S&P 500, the daily. The weekly I use to identify significant highs and lows over the past 5 years or so. So it's understanding, not going to the highest time frame, but getting the balance of the highest time frame versus what time frame's the most viewed. And because it's the most viewed, you are aligning your analysis with the most common view or understanding of all market participants. So it's just a bit of a food for thought for viewers in your analysis when you're going through, to consider, if you haven't yet, consider emphasizing the daily a bit more based upon that understanding. Not based upon what I say, but based upon the understanding of what I've mentioned. Okay. Anything you would like to add, or your thoughts, Victor, or question?
Yeah, I think it's very important to have a awareness, and this can only come after you go through a lot of data, after you appreciate the different time frames for what they are, but the awareness of what and that is very personal to the strategy, right? Specific to the strategy, because even one trader can have multiple strategies, but specific to the strategies, what is the value of the other time frame? Let's say you have let's say you have an intraday strategy. Is there, and the answer to this question is very important. Does the daily say anything? Does it change the odds of your setup hitting or not hitting TP? Or the weekly? Having awareness if there is or not if they are a factor, and the answer probably is there is a place for them to they are some, not all the time, but a lot of the times they are a factor changing or influencing the odds of your intraday trade. Appreciating that, knowing about that, collecting data about that, I think that's because, and other times it doesn't matter. Other times the higher time frame may say something, but it's not as relevant for your decision making necessarily. So it's knowing, and that's what I said. It comes with experience, knowing when it is of significance, and obviously use it, and when it isn't. That's I think is very crucial, I would say.
Indeed, I agree with you on that point, Victor. The one thing to mention from my personal experience, what's always good to start with, especially the analysis, is irrespective of the strategy. That's why I separated the two. The strategy is on itself. Let's do with the analysis. So we always use like you did, a top-down analysis, a top-down view, and we get the actual analysis. Let's be aligned with analysis. So depending on your strategy, the high time frames may not make a difference, but like you said, which I fully agree, makes you aware. So for example, on euro dollar, there's a rising trend. And if I take a long, it's a trade going with the trend, irrespective of the strategy. Could be on a 1 minute. Or if I take a short, I'm going against the trend. So that's what I do. I always come back to in terms of that, what's the daily itself and the trend on the daily. For example, identifying the trend first, and then saying whatever strategy I employ afterwards, If it's long, I'm going with the trend. If I'm going short, I'm going against the trend in relation to the euro dollar. So it's just kind of getting the right perspective. But again, you're quite correct. It's understanding your strategy and the relevance of the timeframes, but also to a point is starting with the analysis correctly and then building your strategy from there as well.
Yes.
Mm.
All right. So
Perfect. No, we've got.
Go ahead. Yes.
Perfect. Maxwell Bonnie mentioned the daily time frame. Maxwell Bonnie mentioned the daily time frame, so he uses the daily time frame. So that's great, 100%. Perfect. Okay, so again, there's no right and wrong answer, just a matter of opinion and experience, but some food for thought I thought I'd share with the viewers. The other topic would be, in terms of the charts, is has anyone given thought about how much data they look at when you start looking at your main analysis to identify the trend? Any thoughts from yourself, Victor? How much data, when you start out with your macro analysis, do you think one would need, or what is reasonable? Or any thoughts on that?
Man, Ashley, you're asking the right questions. These are fundamental questions when you start the chart, because everyone can open the chart, but knowing how much data, for example, this question, or knowing what time frame and why you're starting at that time frame is so fundamental, yet not everyone is asking that question, right? They just open it and they use whatever is visible. If it's default mode, if it's default, if everyone seems to be starting at the daily, then I will stay with the daily as well, without knowing if that's really what your strategy needs. And the data, I had an issue with this, because you would think the more the better, right? More data, more better. In backtesting, that's true. In testing in any way, that's true. But in technical analysis, that's not true. At least not for my strategy. So I really like your question, but I will not answer until the audience tell us what they think about this question. How much data? 4 years. Andre says 4 years. How much do you look back on when you start trading? How many bars, right? If it's the daily time frame, 4 years would be what, 1,000 bars, 800 more or less.
Correct. Plus minus.
Yes. So how much? Because you see this with our CEO when he trades. He compresses, he zooms out. He needs a bird's eye view, and he zooms out so much so that you don't see the bodies anymore. You only see the movements, but no bodies. And when you see mine, I really go into the candles, really go into the bodies, where they start, where they end, and where the wicks are. That's why do I do that? Why does the CEO Saul? Why does he zoom out? And that's where the answer lies. But let's see the chat. Who has Andre says, I want to see the last bull and bear market. Very nice. He wants to have at least two market conditions or regime. One, Mr. Perfect says, our system the best options to be profitable? Okay, so that's another question. Okay. Well, in my question, let me answer it. When I started trading, I thought, as I said, more. Okay, Josvat saying between 1 to 50 on the 1 minute frame. So you're using one candle, as low as one candle, and as high as 50 candle on the 1 minute, according to this member. Okay, thank you for your answer. Maybe we have some more, because we have a delay, of course, when we talk and when you guys see us say anything. There's about, I think, 15 seconds of a delay. But okay, so my experience was that because I use the OHLC data, the open, the high, the low, and the close of each candle, it does not make sense for me to zoom out that much, because then I don't see them anymore, right? That's one thing. And because the order blocks are, that's the same thing, just said in a different way. The order blocks are based on that data, and to be visually visible, right? In order for me to point it out, I need to have, the bodies need to be able to be visible. So I can't zoom out completely. And the other thing is, and this is the answer according to me, you need to have the zoom that is relevant for your strategy. I know it's nothing concrete, but it is true, because for someone who zooms out completely and doesn't see any bodies anymore, that person wants to see the bigger picture in one screen without going to another time frame, or going less to another time frame. And I'm not interested in that necessarily. What I want to see, I want to have the zoom, right? In zoom it as in such a way that I can see the first structure above me, not only the first, the second one as well, above me and below me. So whatever time frame that allows me to see that. So I want to see the next structure above and the one above that, and the next structure up below and the one below that. If I can see that, I know I'm at the relevant zoom, right? Those are the relevant structures for me. So that's the information I need to extract from that time frame. If I zoom more out, I'll be seeing many other things which are probably not relevant for that time frame, right? So to me, that's the thing, to filter, having the zoom, enough candles, not too little, not too much, right, correct, for me to get the information I want without extra, unnecessary information.
Wonderful. Thank you, Victor. I really like the way you responded, because I know exactly what you mean. But also, I want to mention as a pause, the nice thing about what you've mentioned, and also what Andres mentioned in the comments, is that he's given the answer, or how they do the analysis, but more specifically the reason. And that's the nice thing with the technical analysis. And technical analysis allows a person, or it's important that I found in technical analysis, you need to really understand why you use something, that depth and that conviction, not just because somebody said so. So there's not exactly a right answer, because it's all catered upon different opinions, different strategies, etc. But there are some underlying areas that one needs to understand. And the nice thing about, there's a reason why you use a time frame. So the answer to that question for myself is that on a daily chart, the daily time frame, always start at the daily time frame, that's the main time frame for the analysis. I look at a year. Why a year? Because it goes back to an industry standard, a level which you spoke to a couple of, I think it's about 1 or 2 months back now, called a 52-week high. How many weeks is in a year? 52. So I look at a year's data, and specifically, if we look at euro dollar right now, we're looking at a rising trend on euro dollar. Why? Because we've got a series of higher highs and higher lows. That's the key main thing. But also notice, I don't know how many of the viewers would notice, if the euro dollar is approaching a new 52-week high. So when it's a 52-week high, it's a significant level. Why? Because that indicates that there could be more strength coming. Then what I do is that you can see I've got the weekly on the right-hand side. That gives me an idea of potentially, if we have hit that new 52-week high, where potentially euro dollar could go to in terms of the weekly and the significant highs and lows. So that year's data, I always look at for any of my strategies as a baseline for technical analysis. And it keeps me grounded. But again, I always look at a year, and that's the reason for it.
What about the weekly chart? How far back do you look at your weekly chart?
If you look at my screen, 5 years.
5 years, okay. And
so
and that is there
the weekly chart?
Fixed number?
Yeah. If you look basically 5 years to date. So remember, it's a rolling 5 years. So 5 years back from today's date goes back to May of 2020.
which is following the
Same thing with the
same
daily.
principle. It's following the same principle. You're doing equal steps, basically. What I was saying about 5 days in a week, 4 weeks in a month.
Yes.
What you're doing is the same. It's 240 days or candles in a year, right? The daily using 52 week high or low, and you're looking at the weekly 5 years. That's also 250 bars roughly. 260 bars in a weekly chart. So it's that same principle. I recognize that. That's awesome to see.
Correct. Exactly that same principle. What I'm trying to do now is just actually turn it to, obviously, we know that everyone wants to look at gold, and we can see that gold now is approaching a new 52-week high. And if you understand looking at that daily chart over that year, whenever your first generally 1 or 2 new 52-week highs, which Eurodollar has done in the last month or two, is potentially starting a bigger cycle for moving up. So if you go all the way back last year, generally, if you go further back, you can see that gold has been making 52-week highs for some time now. And also it gives you an idea that the more 52-week highs are being made, new 52-week highs are being made, also potentially we can be getting to quite a bit of a blow off top. So I don't know, Victor, I think it was, if I'm not mistaken, in the year 2021. 21, I think it was 21. Yes, 21. On the US indices, S&P 500, NASDAQ 100, and the Dow 30. Do you know how many new 52-week highs it made in that year?
I don't. Have no idea.
It made around 65 new 52-week highs in that 1 year. Yep. It was quite significant. Every time a man new 52-week high was mentioned on CNBC in terms of the number, and that also kind of gives you an idea when potentially a blow off top might also happen. So that just gives you some insight. Some of those areas can give you some good insight into exactly your analysis as well, and insight into the symbol that you're trading. If we look at gold on the weekly, we can see that it's made for the last 5 years multi-new highs. So we're getting to a very rich state on gold. It's getting quite toppish, but again, allow the market to dictate when that potential major reversal would occur. Most likely, we'll probably have a consolidation before we find quite a bit of a blow off, or in terms of a capitulation with gold. But it gives you some insight. Just the simple analysis can give you some insight.
Perfect. I like that. I love that, because it gives you another way to assess whether the streak, the number, the streak of 52 weeks high, the longer that streak is, the more topic. It's just another way of looking how to assess this topic, because depending on the asset, that number could be a bit higher or lower, right? The equity is going to be much higher because you have that positive drift where it usually goes up, more years than not. So it's logical that you're going to have longer streaks of 52 weeks, number of 52 weeks reached one after another, compared to, for example, Forex, where you typically don't see that. I don't think you're going to see ever. You're going to see 62 times that 52 weeks high being reached in 1 year. It's possible, but it's not very likely.
Correct. But it's but the concept is quite unique to keep an eye on any symbol or any asset class. The other thing just to bear in mind as well for the viewers is there's a saying that markets move up by the stairs and down by the elevator. Have you heard of that?
Yes. It's a very common saying. It's so true.
The interpretation of that saying is that markets will take slightly longer, almost double the time to move higher, and when they fall, they fall in almost half or even a third of that time. So it's not uncommon for a gain of X% over 2 to 3 years to be basically eradicated within a month. And that's happened before. So, or a month or even less. So markets always move up by the stairs, slowly, gradually. And when they move down, it really falls like a stone. And again, it's that herd mentality, that human nature panic. That panic feeds on itself, and you find that movement down is always much more exaggerated.
Yes, totally. So I totally agree with that. And as a trader and as well as an investor, that is where the money is. It's recognizing and these intricacies of herd mentality and herd psychology, and to exploit it, being aware of it and knowing that that's an exaggeration and it's not really necessarily reflecting market conditions or fundamentals behind it. It's just the scare, the fear, the greed by which the market participants are expressing their emotions. And that's where a good part of a lot of edge is, for sure.
Indeed. The next thing I wanted to mention from what you mentioned, Victor, is the following: is that when you were mentioning how you analyze and it doesn't make sense to expand out on the candles, because you don't really see the high, the low, or even the open. You don't see it quite clearly, which is quite correct. So in terms of chart styles or chart types, I use the line chart because it's nice and clear. It's very intuitive as well, to get that bigger picture on the daily over a year. And then what I do is I combine it with a candlestick chart zoomed in together. So you get this effect. Let's just see if there's going to be a delay, which there might be. Might take some time. So I'd have them combined together when I analyze. And that's what in my opinion, I've found that highly successful using both in terms of the chart style. So a line chart and a candlestick chart. The candlestick chart, though, is zoomed in, so you get that both together. Just
I think the screen is frozen, or I'm not sure.
It seems to be a bit frozen. Okay. Let me unpresent, and then let me see if I can get that to wake up.
Okay. In the meantime, I'm going to look at EU or GU, whichever you guys in the audience want us to look at. Actually, I would like to let's look at which one is more interesting. That's a very nice retest on that daily order block. That's a very nice move on pound. Pound, of course, tomorrow will be we have some pound news, and we have interest rate on Thursday on pound, so it may have something to do with that. Market participant positioning themselves 2 days in advance before the actual move. So that would be. I don't think there's. I would rather look at EU, or perhaps let's look at gold to see what we have. We have a good question here about. We can discuss this when you're ready, Ashley. A good question there.
Thank you very much, Victor.
Whenever you're ready, just go ahead.
Perfect, 100%. Does the line chart help you be less emotional? No, Andre, the line chart doesn't help me be less emotional because that's the analysis. It's set. To help me be less emotional is understanding that my role as a trader is to manage risk, and the fact that part of trading is losing. So I'm very comfortable losing, but I'm more comfortable understanding how to lose well. How to lose well is about minimizing how much I lose compared to what I initially set out to lose. That certainly helps me to be less emotional. The line chart line does it. The line chart is more for the analysis to add probability to that trade. Okay, so hopefully that answers it, Andre. what I wanted to share with you, Victor, is that, or an audience as well, is that I've got a whole bunch of other time frames here. But if we ignore the right-hand side and we focus on the daily line, and then this is the daily candle. So I have the two combined together so we can see the bigger picture and then the zoomed in view of what's happening currently.
Correct. I understand that. You mean all the the zoomed in where you see the candles. You have about what is it, like 20 candles, and the other one you have the line chart that gives out the bird's eye view. So you're using both of them to have the best of both worlds, basically having a panorama view, but also a sort of a magnifying glass to look at what's happening right now.
Correct. And a key thing is about at the same time. Very often we see people that just change the time frame or they change the view, then they've got to rescale, etc. And sometimes that gets you when you actually do an analysis, it's all about seeing and understanding. So if you see it all at the same time, it certainly helps your progression of understanding technical analysis. And sometimes, depending on your strategy, depending on where you are in your trading journey, it might assist to clarify certain areas or understand better your strategy, or understand more specifically the weaknesses and strengths of your strategy, and then you know how to adjust. Very often, and it's been talked about on the live stream as well, about strategy hopping. I find that people strategy hop because they don't understand how to basically mechanize or how to assess their current strategy. Say, this is a weakness, this is a strength. And in a strategy, there's always going to be a degree of some weakness and a degree of some strength. And it's getting to a point where you understand, well, that's the weakness of the strategy. That's it. That's what the strategy is. You can't really do too much about it. You try and obviously refine it. But at a point in time, there's going to be a certain amount of weakness. It's about how comfortable you are with that weakness, and then understanding where the strengths lie. And then you can deploy that. And that's, again, the reason why I use a multi-strategy approach. So not one strategy is going to fit into all our objectives as a trader. So you need to diversify.
Perfect. Yeah, well said. That's actually well said. Yeah, because what we need to remember is that no strategy is perfect. So you just have to. Each strategy will have their losing streaks, their drawdown periods. You only have to choose one you're comfortable with. They're all gonna have rough patches in there. There's no strategy that's gonna go up in a straight line. It doesn't happen. Forget about it. Stop looking for it and embrace something that makes sense to you. Is a much better approach to dealing with this.
Indeed. Perfect. 100%. Well, that was basically my idea and suggestion there, Victor. I know almost we coming up to the end of the stream. I don't know if you want to engage with some of the symbols, the analysis that maybe the viewers want to see before we end. But from my part, I wanted to share with the viewers just some insight in terms of the technical analysis that maybe might be able to help you. But if you haven't thought about it, I would highly advise give it some thought and then see if it works for you or not. But I always, again, love our interaction, Victor, and always enjoy your comments and your thoughts and your reasons.
On the left lower corner, we see a sort of a greenish, gray-greenish, exactly, that can. And I see that you have the last part, a black background. Why is that? I have a suspicion, but why is that? Why do you have a different color? Go ahead.
The reason for that is because understanding how time frames interlock or interfit, that whole fractal objective, and that black area is exactly that year on a weekly time frame. So there's the year, slightly more than a year from the 24th of April 2024 all the way to current, and this black piece is the exact portion of that year.
Exactly right. That's I knew it because that makes sense to me, right? having to know,
Yes.
where the same thing as you have like infographics where you have it on websites or paper. You have you may have an overview or actually a zoom in visual representation of a topic, but you have to be able to place it into perspective as to what is it in the bigger picture. And that's exactly what that black box is helping us, looking what the graph above, what is it in the bigger picture sense. I like it. I love it, man. You are bringing some very great stuff to our viewers, Ashley. And we're getting clear.
Wonderful,
close to
wonderful.
we're getting close to the end of our show. People, if you enjoy this, let us know with hitting the like button. There's a little icon there in the shape of a bell. If you don't know what it is, don't worry. Just click it. Trust me, it'll be fine. Click it and subscribe to our channel. Click the thumbs up as well while doing that, and supporting and showing us, making sure we can continue to provide this kind of content to you as a trader. We have I think we mentioned this, but what are
Wonderful.
these
Thank you to all the viewers
on
about the comments.
Yes, we are. We see they are very appreciative of
The
how
dots.
you are. The dots, yeah. Look, we're come back to the dots. We do have indeed many very appreciative of what you're bringing to the table, Ashley, and rightfully so. What about the dots? You talked about this before. We mentioned this, but for those who are new or maybe have missed that part, what are the dots? What does they tell you? And how can the traders use them for themselves? What is it called, and when should they use them, and how?
Okay, it's a detailed answer, but the short version is the dots is an indicator called the PSAR, which stands for parabolic stop and reversal. There's a whole concept about that, which is also based upon my core strategy. However, the dots act basically like a moving average. The same principle as a moving average, but the physical calculation of the PSAR is completely different to a moving average. It acts in the same way. So if the dots are above the candles, or depending how you'd like to do it, which is first, the candles below the dots, it indicates that prices is falling. If the dots is below the candles, or the candles are above the dots, it indicates price is rising. Now, the key thing with the dots in terms of how I use it is that is one of the key, not the only one, but one of the key indicators I use to actually already converted my hand trading strategy into an EA. So that's one of the indicators I use. So it's understanding the analysis and understanding the physical strategy first, how that fits into the technical analysis. And then over time, I've converted the hand trading strategy into an EA. So the EA uses the PSAR to actually automate the strategy. But it's only one of the indicators I use for the EA.
So basically, you use it to indicate a trend, right? When is the trend shifting in that particular time frame?
Correct. And there's advantages to and disadvantages and disadvantages to use it compared to the moving average, even though the calculations are different. So there's a similarities as well, but it's understanding that process. But you're quite correct, Victor. I use the PSAR indicator for the EA to understand when the price is shifting from one direction to another.
Perfect. There you have it. Everyone watching another episode of the 5ers, bringing content, education, knowledge, insight from real traders into your screen. The only thing you have to do, the only thing we ask is that you keep on visiting our stream, hitting the like button, and letting us show so you can stimulate the algorithms to show our stream to more viewers out there that might benefit as well from the content we provide. Ashley, on behalf of all the viewers and everyone at the 5ers, thank you for bringing great content, and I can't wait to have another moment with you again, where we will be continuing looking and digging deeper into the world of trading, analyzing it, looking at your trading accounts, and learning from you, because we do have a lot to learn from you. We appreciate you, Ashley.
Thank you very much, Victor, and thank you to all that you do for the community. And again, like we started with, nicely ending, sharing is caring. And I firmly believe this skill should be a life skill, and to help people along the way is always rewarding.
I can say amen to that. Ashley, on the screen before you go, there is on the platform, there is a little message where it says 2 people. I left a little message right there for you. That's a little inside information for everyone. We have come to the end, as we said. We'd like to invite you for tomorrow's stream. We'll have a new show, great content. We have a lot of surprises this week. We're going to be celebrating the 65,000 subscribers this week with giveaways you don't want to miss. And we have competition as well coming up. Just look at our YouTube channel and you see that we are constantly working for you to bring you the best content for your trading experience. So on that note, see you tomorrow. Bye-bye.
Perfect. Bye-bye, everyone. Thank you.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content that we provide here at the 5ers. We'll see you in the next one.